right now. All right, there we go. So, yo, what is up for you guys watching this on the YouTube replay? This is the second stream of the day. I hope you're having a great Sunday. And we're going to be looking at the market real quick. I got some stocks I want to share with you that I think are really cool. And we're going to be seeing how the market's doing in the overnight market. So, hey, it looks like Progressive is up 3%. This is one of the stocks I wanted to recommend. Oh, looks like this is fake volume right here. Yeah, if you kind of look right here, only 8 shares were traded at this time. So that's how you can tell sometimes if something has like a fake volume or if it's just one share traded, it's not actually up 3%. There was only one share traded at that price. Anyway, check this out. Here's our main account right now. We're up 0.2% right now in the overnight market. Looks like Meta's doing pretty good. Meta's up 0.44. And check this out. Our largest holding in our Robinhood portfolio is now actually CEG. That's our largest holding. That's $5,100. But yeah, actually, this is really good. Look at the QQQs. The Qs are up 0.23% in the overnight market. The SPY is up 0.2. So it looks like we might actually have a pretty green tomorrow. Yo, Palantir reports earnings tomorrow, so we'll see how that goes. Why did all stocks go green when they were just red? Yo, who knows? Maybe we were oversold. The market just loves to be bullish right now. Yo, what up, Tommy? Good to see you. Hope y'all are having a good Sunday, by the way. And if you guys got any stocks you want me to look at, let me know in the chat. I'll get to them in a second here. I want to do a quick portfolio update. So yeah, Palantir reports earnings on Monday, which is tomorrow. So we'll see how that does. Microsoft's up a nice chunk. So yeah, this is our main dividend growth portfolio. And we also have a Roth IRA. Let's see how that's doing. Hey, we're up 0.43% in the overnight market. This is the only one available for trading. Hey, Main Street Capital? No way. Looks like Main Street Capital. This is one of the few monthly paying dividend stocks. So Main Street Capital pays a monthly dividend, which is pretty cool. Wilto says, is it true 120% tariff on China? I don't think that's true. But it could be. I haven't done much research into it. But yeah, I also now want to show you the Webull portfolio losers. Yeah, Reddit's down on the day. And we also have finally our main buy and hold portfolio. So yeah, this is our Moomoo account, my favorite portfolio. It's called the buy and hold account. So basically, once I buy a stock in here, I try not to ever sell it. I really just try and hold stocks in here for the long run. And these are all the stocks that we own in here. We've actually been performing very well year to date. We go right here. We're actually up on, let me see here, return money weighted average. We're up 39% year to date, which is pretty cool. So yeah. We can go to the all-time as well if that'll work. It might not. All-time, yeah, we're up 105% all-time versus the S&P up 50%. So we've done pretty decent in this portfolio where I just buy and hold stocks for the long run. I haven't taken a single profit on any stock in here. And one stock we've been loading the boat on is Co-Consolidated. This is one I really like. So yeah. Who's your crypto broker? Yo, I actually don't own any crypto at all. So I don't own any crypto. Oh, looks like our portfolio just fell 0.26%. But yeah, someone said AMD. Yeah, let's get to the stock analysis here. Let's go over here to the Moomoo app and let's pull up AMD. So I'll show you kind of how I analyze a stock here. And yo, sorry, my Wi-Fi is a little buggy today, so it's slow. I apologize. We'll try and work through it here. But let's check this out. AMD, first off, we know they report earnings this week. So this is one that we kind of got to watch. August 5th. Wait. August 5th, that's in 2 days. So yeah, in 2 days, we get AMD earnings. I can't wait. This is one that I own. Here, I'll show you my position very quickly. Yeah, check this out. It's actually, I think our largest holding in here. Wow, we got $2,200 worth of AMD up 39%, which is pretty cool. But anyway, check this out. Here's why, obviously, we know AMD has a huge PC GPU market share. They have a 17% PC GPU market share, but AMD is really a data center play because a lot of data centers need AMD and NVIDIA chips. Well, AMD is like, hey, we can just do this ourselves. We get the newest chips the quickest. We literally make them and for the lowest cost. So the data center business is booming over there on AMD, and good for them. That's actually the main source of revenue now, and it's done wonders for their free cash flow. I mean, look at this. The free cash flow is up 91%, making nearly $1 billion of free cash flow a quarter. And look at the net income as well. Net income of 709 mil. I mean, incredible. And look at this absolute fortress of a balance sheet. They actually have no net debt. So yeah. Do you know if on Robinhood can I buy full shares when the market's closed? Yeah, you can only buy only in the overnight market. I'm not sure. So yeah, one stock, I wanted to go over FuboTV and Reddit as well. Yeah, Reddit's a really interesting one. So check this out. Ticker symbol RDDT, absolutely incredible earnings. And I do own this one, so I might be a little biased here. But yeah, I got 4 shares of Reddit left. And let me show you what I really like about this company. I mean, they absolutely blew away earnings. So a lot of people, when they hear Reddit, they think it's like a meme stock. But let me tell you, Reddit is no meme stocks. First off, the orange line is kind of what the analysts were expecting. And well, they crushed earnings on revenue, net income, and EBITDA. It was a triple beat, absolute fantastic of a quarter. I mean, forget the name Reddit, for example. I mean, just look at this growth. I mean, after growing the revenue 53% year over year, the last quarter, this same time last year, they grew at another 77%. They made 500 million of revenue just this quarter. Absolutely incredible. Record net income, 90 million of net income. Fortress of a balance sheet again. Reddit actually has no debt whatsoever and $2 billion of cash. Here, actually, let me check that, Yeah, $2.06 billion of cash in 2025 Q2. So great company. And the cash flow as well, the FCF, which stands for free cash flow, up 3x, 307% year over year. So Reddit is just one that deserves to be having that huge hype there. And I also want to go over Uber and SoFi. Yeah, so Uber, this is another one that I think I'm actually looking to buy this stock in my Roth IRA. So I'm highly considering buying a share or two of Uber because I've been thinking about it and this is what I really want exposure to. And here's why. I mean, this is just such a growthy company. I think they're just going to continue to win. You see their active users. They have 170 million monthly active users, up from 150 million. Look at this. The mobility revenue is growing like crazy. Mobility revenue is up 15% year over year, continuing to grow. And then they also had this delivery revenue, which is Uber Eats. Uber Eats is up 18% year over year. So Uber is just doing really good. And look at the FCF, which again is free cash flow. The free cash flow is ridiculous. I mean, 2.25 billion just in the most recent quarter. And the net income is, well, you really want to look at operating profit. If you look at net income, last quarter they made 6.9 billion. That was a one-time adjustment. They really made 770 million, but still these year-over-year growth rates are insane. So that's what I love about Uber. They're deleveraging their balance sheet as well. And what that really means is, yeah, hold on here. If we go to the balance sheet, check this out. Look at this gap right here. The liabilities used to be 68% of the assets. Now it's only 56 and the assets have grown. So, I mean, Uber is just a great company, printing free cash flow. They just bought $1.25 billion worth of Lucid cars, which they can easily afford half a quarter of free cash flow there. So yeah, Marcos, I really like Uber stock. Oh yeah, so let me go to SoFi here. Yeah, I saw SoFi chat. Yo, what up? What up, Sexy K? What's up? Hope y'all are having a great Sunday, by the way. Britt says, I have Reddit. Yo, congrats if you own Reddit stock. They've just been performing like a monster. But yeah, here's SoFi Technologies. A lot of people have heard of this one probably before. They're a fintech. They have their own banking charter, which is pretty unique. Like, check this out. Half the revenue comes from lending. So lending business, but also the best part about SoFi and why I think they deserve all the hype around their name is actually this financial services growth. I mean, look at this. Fintech revenue's up 101% from the previous year. I mean, that's what you want to see. This is the kind of stock that I'm comfortable buying and holding for the long run. So financial services revenue is off the chain. And also, if we go to the net income right here, why does it say cumulative? Quarterly. So yeah, the net income was 100 million just in the most recent quarter. I mean, absolutely incredible. So they're the most profitable they've ever been. People are really starting to take SoFi serious. So I think they deserve that nice stock price appreciation that they've had. So what's your opinion on Robinhood stock? Hey, yo, Robinhood has been actually, that's my best performing stock of all time. And I regret every share I've ever sold of it. So here in my growthy portfolio, yeah, we got 5 shares of Robinhood left and we're up 600% on them. So yeah, they deserve to be doing good. I'm actually shocked the stock isn't up more. I guess they've already had such a nice rally and they're a bit overvalued, but the earnings were incredible on Robinhood. So check this out right here. If we just go to the revenue growth, top line growth, it's up 45% year over year. So the revenue's up 45%. And look at this margin, first of all. The net margin is a 40%. These are incredible net margins. So they're making a couple hundred million of net income every single quarter. I mean, people weren't taking Robinhood serious. They used to lose a couple hundred million a quarter. Now they're just, with their new Robinhood Gold and stuff, it's making them so much money. So Robinhood, they're such an innovative company. I no net debt on that one either. So I like that one. Hey, SDS, I appreciate that. Yeah, I like looking at the financials of a stock here. I'm not an expert. I'm not financial advice. I sell nothing, by the way. I don't have a course, book, Discord, literally nothing. Just on here giving my opinion. Yo, what up, Shauna? How's it going? Happy Sunday. Yo, Gabe said UNH debacle. Yeah, so let's pull up UNH stock. I do think this one might be worth a nibble. Not a huge position. Again, this one probably might go lower, but I think it's worth a nibble here because the risk to reward looks pretty decent. I mean, at this valuation, the stock is like priced in for the net income to collapse another like 30% or something. I mean, look, the PE is a 9.9. I mean, that's super cheap. The net income could fall another 20, 30%. And I think it's still relatively reasonably valued. I mean, we could look at their segments of revenue. We're actually a customer of their OptumRx. We use that. And I mean, look at this growth. I mean, they're still a really growthy company, but it's the margins that are hurting right now. And the government doesn't really want these healthcare providers having high margins. So look at this kind of thing about this. The revenue grew 12%, but the net income fell 19. So again, that really is a margin collapse there. But that's already priced in kind of. So I think this one, the risk reward is decent. They have like a 3% yield as well. Hey, thanks so much, Shauna, for the roses there. Really appreciate that. Yeah, we'll look at AppLovin too. I wanted to look at FICO first. Yo, what's up, Cameron? He said FICO. So yeah, if anyone's heard of like your FICO score, this is the company that owns it. So check this out. They've actually kind of been stepstoning down here. Basically on the news, there was no earnings on these red candles. It's basically the government. There was only really two providers of like scores to like rate people on their credit, and FICO, basically the government just introduced a new way as a FICO competitor, so they're going to have less market share. But anyway, like look, the scores business is 60% of the business, and they've had immense pricing power. Like whenever you go buy a car, a big ticket purchase like a house, you're paying like a couple dollars for your FICO score, and people don't really mind that. And they have so much pricing power that like whether you're paying $3 or $6, it doesn't really matter. So anyway, the FICO score business has seen a lot of pricing power. Look at this net income. Net income's up 43% year over year. They're really profitable. But the reason they're falling is because the government introduced like a new competitor to them, which I found interesting. Merxa said, what about Tesla? Yo, well, we'll check out Tesla too. Let me look at AppLovin real quick. Thanks again, Shauna, for the roses. We got to look at this one first. Yeah, I think are you talking about what app is this or AppLovin? I think you mean AppLovin. Oh, Cameron said what platform is this? Yeah, hey, actually, I'm on a brokerage right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio. It's the very first link there. It's free. And it's an affiliate link too. So if you like deposit $100, we'll both get some free stocks. And it's my favorite app for analysis and stuff. Like, let's go analyze AppLovin. Like, this is the best part about this app right here, in my opinion. So if we go and analyze AppLovin, I believe this is a great company, great growth stock. You might want to hold for the long run. So look at this. This is an advertising company. 80% of the revenue comes from advertising. And look at the growth here. I mean, you can't make this up. It's literally at a new record, up 71% year over year, 1.16 billion of advertising revenue. And not just advertising revenue, but profits. Like if we go to the net income and the free cash flow, it's ridiculous. So, sorry here. It's not, there we go. Sorry, disconnected for a sec. But look, this net income is crazy. They made 550 or 580 million of net income just in the most recent quarter. So they're going to be making over 2 billion of net income every quarter. And the free cash flow is even better. It was 830 million of free cash flow, up 111%. The growth here is ridiculous. And that's why I think AppLovin deserves this crazy stock price appreciation, because the fundamentals have really increased. The free cash flow, the net income, everything about the business is growing. I know they are in like some like lawsuit right now against Meta. I think Meta's like suing them or something. I don't know too much about that. I read something, but I didn't look too much into it. Yeah, hey, they're such a great growth stock. Oh yeah, so now let's check out Tesla right here. To be honest with you, this isn't one I'm going to be too bullish on because, yeah, so I'll get into details here. So if I judge Tesla the same way I would any other company, they're not really doing too great, to be honest with you. So let's go check this out here. So Tesla, we can see their total vehicles delivered. It's down 14% year over year. So here's the valuation of the company. So check this out. If we go to the PE is 180. So versus the industry average of 24. So they have this ridiculously high price to net income multiple. And that's okay sometimes. That's okay for some companies if they're really growthy, but Tesla kind of lost all its growth. Like, look, 87% of the revenue comes from their automotive business. And look, it's down 12% year over year. And if we go to the other segment of revenue, which is 12% of the business, it's also down 7% year over year. So both businesses on Tesla are down near double digits. And also, this is the other bad news. The revenue's down 11%, but the net income is down more than that. And actually, they had a little gap net income trick. You see how they made 1.2 billion in net income? They actually made less than that because the operating profit's only 900 million. It's down 58%. So the margins kind of collapsed on this company. Again, this margin's like artificially high this quarter. It's really lower than 5.3%. But anyway, I think the valuation's too high, and I get the high valuation is coming from the robo-taxi network and the Optimus Prime in the future, but it's just, in my opinion, hard to pay that premium right now. But yeah, Tesla is cool though. So, Amazon stock. Yeah, we can look at Amazon too, and we can look at Lockheed Martin. Yeah, we'll check out those too. And Jeff Mack, what's up, man? Hope you're having a good Sunday. We'll check out SoundHound AI as well. So, Amazon just reported earnings. I love Amazon, man. So there's a mixed bag of earnings here. They beat on every metric. First off, the actual numbers were great. They beat on revenue. They beat on net income by a huge gap. I mean, huge EPS beat and EBIT beat. So the reason the stock is falling, in my opinion, is because they lost 2% market share for their AWS business. So AWS is a huge segment of revenue for them, and it's their cloud provider, and it lost 2% market share, one to Microsoft Azure Cloud and one to Google Cloud. So they did lose a little bit of market share, and that's really why the stock fell 8%. I don't really know why. Also, the free cash flow was really low, only $300 million of free cash flow. That's because they're so like CapEx heavy and investing so much in the future. So the cash from operating activity was $32 billion, but you go to the cash from investing activities, they literally invested $39 billion back into the business, like acquiring new companies, building out infrastructure. So I love that about Amazon. Oh yeah, look at that. Jeffrey Bezos owns 8.3% of all the shares. So there we go. Yeah, I think Amazon's a great buy and hold for the long run. And actually, one more thing on Amazon, because they own Twitch, Whole Foods. They're not just Amazon, but there's margin expansion here. So if you look at the revenue's up 13, but the net income's up 34. So what does that mean on Amazon? Recently, they've been a margin expansion story. So look at this. They have double-digit margins now, 10%, 10%. Used to be a tough business, single-digit margin here. So they've really just been improving their margins over time. It was even negative in 2022, negative margins. Now they have a 11% net margin. So a record margin. So most profitable they've ever been right now. I think it justifies a buy. I'm actually looking to buy a little more of Amazon because I don't have that much of it, like 12 shares, but I do really like Amazon. So Gary said, what do you think of Lockheed Martin? Oh, we got to look at SoundHound AI. You know what? We'll look at SoundHound AI first, then we'll get to Lockheed Martin, because SoundHound AI, this is kind of a meme stock, but there's one thing you want to look at if you do hold this stock, and that's this subscription revenue. This is kind of what's been it's kind of the reason the stock has gone up so much, the immense growth from their subscription service. I do love subscription model companies because it's all recurring revenue, but you kind of see what happened here. I mean, look at these incredible year-over-year growth rates. I mean, the revenue literally went from nothing, 600,000 to 24 million just in the most recent quarter, up 585%. So this growth rate of the subscription revenue, what's it going to be this time next year? So someone said, which app is this? Webull Premium? No, hey, this is actually a brokerage called Moomoo. If you want to download this brokerage, it's in the link tree in my bio, the very first link there. I do have Webull as well, but I like this app more. It has better analysis and stuff. So yeah, it's in the link tree in my bio, very first link for this brokerage. It's my favorite one for analysis, lowest fee, best free tools, it's my favorite app. If you want to see why, I have YouTube videos on it too. So anyway, SoundHound AI, you're basically just watching the subscription revenue growth there. They are losing a bit of money. So let's go to LMT right here, Lockheed Martin. So this is your aerospace and defense company. They have a lot of military government contracts, but they had really bad earnings. So that's the unfortunate part. So if you scroll down here and look at this, where the revenue comes from, I love how diversified that they are. I love that they have all these different streams of revenue. But here's the bad news. We go to the net income, it kind of just collapsed. And this wasn't some one-time adjustment. This was really real. They really only made 342 mil of net income. So it's tough seeing that the business really isn't growing. The revenue is only up 0.18 and the revenue fell 79%. So the margins really did just collapse. So I think that huge fall that they had is actually justified. But let's see how much actually. So they made 342 million of net income. We just go to the cash flow statement. We can see how much the dividend cost. So the dividend cost 771 million a quarter. So they need to at least make 700 million of net income to just pay the dividend. And also, I love Lockheed Martin for the share buybacks that they're doing. Check this out. They're spending like 500 million to $1 billion every quarter, just buying back their own stock. So shareholder-friendly company, but got to be careful with the net income declines. I mean, they couldn't afford the dividend the most recent quarter. That is a bit not great. What up? Steve Doc said LYB. What do you think of LYB? What is this one? I don't know if I've looked at this one before. Lyondell Basel. So a $17 billion company. So look at this. The stock has not done too good. Let's go see if we can figure out why inside the earnings. So olefins and polyolefins. I don't know what this is. Intermediates and derivatives. So you can kind of see the revenue is down 11% year over year. So let me just go to the revenue down here. All these combined. Ooh, so that net income doesn't actually look pretty good. But yeah, look at this right here. Sorry, my Wi-Fi is a little slower here. This kind of explains why the stock isn't doing too good. Like, look at these declines. After falling 15%, the revenue has now fallen another 12% to only 7.6 billion. So they lost the growth. The growth is actually negative, and look what that did to the net income. They used to make, a couple hundred mil every quarter. Now it even went negative, and they barely made 100 mil. So I can actually see why that one has fallen a bit. And it might make their dividend unsustainable because look at this. They have a crazy 10% dividend. The payout ratio is over 100%. So you got to be careful there. Um, what about your opinion on Tesla? I have 3QTY. Hey, what's up? I don't 3QTY Tesla Express. Yeah, I don't know. I don't do much options, man. I'd be careful with that Tesla position. Anything could happen though. Uh, Not financial advice here. I don't really want to get into that, but yo, good luck there, Mercs. That's just I don't know. Tesla's something you want to do options on. Tesla, I don't know if that's a stock you want to buy and hold forever. I think it might underperform its competitors of like Meta, Amazon. So anyway, here's MicroStrategy. This is like your Bitcoin proxy. So what this company does is they basically issue a bunch of shares and they buy Bitcoin with this. So look at their balance sheet right here. This is the best part. I mean, look at this. The balance sheet was 7 billion of assets last year. Now they have 64 billion. What happened? How'd they get 60 billion of new assets? Well, they diluted the shareholder by 50. Actually, it was like 40 billion. Bought just Bitcoin with it, and the Bitcoin's appreciated a little. So a MicroStrategy, they're like a Bitcoin proxy. Usually whenever Bitcoin goes up 1%, they go up like 2 or something. I saw it's been talking crazy dips. What up, Gary? So I bought ANZ at 117. Was that a good buy? I haven't heard of this stock. Wait, let me know. AMZ. Hey, is this stock right here? It's a Canadian company. Hopefully not. Yeah, that's a $5 million company. I don't know. Let me know what ticker symbol that is. So, Emano said OSCR. So, yeah, Oscar Health. This is a pretty cool company, actually. So, someone said China stocks is the place to be. I will show you my favorite Chinese stock after this. Remind me, I have a really cool company I want to show you. Yo, what up, Lee? We'll look at UNH, ABA. What up, Patel? We'll look at ABAT, DUK. What up, Jay? Yeah, we'll look at NVO too. So here's Oscar Health. This is another kind of healthcare company, and they've kind of been caught in some of the UNH regulation shenanigans. They're a Medicare, Medicaid provider, and that's kind of why the stock has been struggling recently. But here's why I really like this one and why I'd maybe consider looking into this one. They're so growthy. I mean, they made $3 billion of revenue just this quarter, up 42%. So they made $3 billion just this quarter. If we go back to 2020, the full year of 2020, they only did $590 million. So they went from $590 million for the full year 2020 to $9.2 billion. I mean, incredible. And they're probably going to be net income positive every single quarter this time next year. I mean, the net income already grew 55%. So yeah, Oscar Health I like that one. It's interesting. So Patel said ABAT stock. Let's check it out. So I don't know if I know this one either. ABAT. So come on here. Let's see if we can find this one. ABAT, there we go. American Battery Technology. So very small name, very small company here. Like, look at the market cap. They're only a $200 million company. So I usually don't like to cover these kind of stocks, but I guess we'll give them an analysis anyway since we're here. So look, they're a $200 million company. They lost 11 million just this quarter. That's 5% of the market cap. They're losing literally 20% plus of the entire market cap a year. They better have some growth, and the revenue is only 900,000. At least they have a decent balance sheet, but yeah, nothing's really blowing me away there. I don't think they have any bank. Well, they need to fix their net income losses. So someone said DUK. Lee said DUK stock. Is that Duke Energy? I guess we're about to find out. Oh, and then we got to look at the China stock too. I want to show you Tencent and Futu. There's some really cool names out there. So Duke Energy, check this out. This one's nearly at an all-time high, and it's just the utility sector. The utility sector is on fire just from electricity demand. And look at that, electric utilities and infrastructure, that's most of the revenue. And they got some gas products. But yeah, these regulated utilities just usually return like 6-7% a year. And I mean, look at this. They're making 1 billion to 1.4 billion in net income every quarter. So Really nice numbers there. They also have a nice dividend, a 3.4% dividend. So these utilities usually have nice dividends. And yeah, if you want to look at the utility ETF, look at ticker symbol VPU. It looks kind of just like DUK Energy. It's at an all-time high right now. So the utilities are on fire. So nice. So how are we feeling about NVO? Yo, how do I buy a full share on Robinhood? Well, yo, Tommy, you can't buy shares while the market's closed, but you can do it in the overnight market. When it says the time of day, just select like overnight. So here's NVO. This is Novo Nordisk. So this is the company that owns Ozempic. So if you've heard of that like weight loss prescription Ozempic, this is the stock that actually owns it. They're a European company, or they're a Netherlands, something like that. Anyway, I think the risk reward might be pretty decent on this one. You know, you get a 3.3% dividend yield. The PE is a 13. I mean, look at how the PE is collapsed. I mean, we go to this the past 3 months here. I mean, the industry average is 23. They're trading at a 13. So the PE is dog cheap compared to the industry. I think that might be because, yeah, look at this. 95% of the revenue comes from their obesity care products. That's Ozempic. Their Ozempic patent actually expires in 2027. So that's not great. But for right now, everything is great. They're printing money. This is in USD as well. 4.2 billion just in the most recent quarter. So incredible numbers there on NVO. So that one might be worth the nibble, but again, that industry is a bit in trouble. So someone said your favorite Chinese stock. So yeah, my favorite Chinese stock is actually, oh, I don't know the exact ticker symbol. Let me just type it in. It's actually Tencent. So, oh yeah, TCEHY. So yeah, this company right here. You've probably, if you play video games, have you heard of Riot Games? So this company owns League of Legends, Valorant. They also own Supercell, so that means Clash of Clans, Clash Royale. They own PUBG, like PlayerUnknown's Battlegrounds, and 50% of Fortnite. So this is just a game conglomerate. They're a $622 billion company. Just they print money. If they were a U.S. company, they'd literally be a Mag 7. They would replace Tesla. So um, let's see. Do you mind? Hey, I don't know, Tommy. Circle or Galaxy? CRCL. Let's check this out. So Circle right here, this is your stablecoin issuer. So basically, this company owns USDC. If anyone's heard of USDC before, this is a company that owns it and issues it and runs it and everything. And I know they're net income positive. Like it's hard to see because of these huge losses, but they actually made 64 million of net income just in the most recent quarter, and the quarter before 50 million. So they're a profitable company, which is pretty cool. So yeah. All right. Let's see. Circle. Yeah, I do really like that one. Kind of a crypto play. So Amazon said Amazon is an attractive buy right now. Yo, I think too. Jay said AMPX stock. AMPX. What's this one? And then we can look at KC Kingsoft. We'll look at that one too. So here's Amprius Technologies. They've had a nice little rally. I mean, look at this kind of stock price appreciation right here. Pretty good. Let's go look at them in their financials. So batteries, wait, yeah, battery segment. So it looks like AMPX sells batteries. Let me go to market. Oh, so look at that. Only 34% of the revenue comes from the US. So they are losing 10 million a quarter. The revenue growth is actually the best part here. Look at that revenue growth. They went from 2 million this time last year to 11.3 mil. That's really good growth. Pretty decent balance sheet as well. So as long as they can keep up that growth, I do like that one. Jay said, are you on Webull? Hey, no, I am not on Webull. I'm on a different brokerage called Moomoo. If you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's my favorite one. Lowest fees, free. And I keep my idle cash in here. Look, if you kind of look in the middle of my screen here, I have $700 of cash. It pays you daily interest, which is pretty cool. So your cash works for you while you're doing nothing, which is pretty cool. And with Robinhood, you have to pay. I used both these other brokerages as well. With Robinhood, you have to pay $5 a month. And you only get a 4% APY, and you have to pay $5 a month for that. But on this brokerage, Moomoo, it's free. So anyway, if you want to get it, link tree in bio, first link there. Let's keep going here. So let's look at KC, Kingsoft. Let's check it out. So yeah, this is a Chinese company, but they have had some nice little stock price appreciation. They went from 2 to 13. So wow, that's really good. So yeah, they are a Chinese company. So just for simplicity, we'll convert their revenue to USD to US dollars. So let's check it out. So the revenue's up 10% year over year, and they are still losing money every quarter. So that's the one thing I would be careful with. They are losing money every quarter. Where does the revenue come from? Market. So yeah, all the revenue comes from China. And yeah, the U.S. probably wouldn't allow this software. So hey, looks like we're just looking for a recovery play, looking for the growth to come back on this company. I would still be careful because they are still losing net income every quarter at KC. Um, let's see. PM, please. What up? Tate said PM stock. Hey, this is a dividend play I like. Oh, Marathon. Yeah, Marathon. That's like a Bitcoin proxy. Yo, what up, Taidu? What's up, man? Happy Sunday. Do you think treasury bills are a good investment? I do. Yeah, TLT is the best way. Check out TLT and BIL. We'll look at those after this. So, oh, did my mic? Okay. So anyway, Philip Morris right here. This is a nice dividend play. You get a 3.33% dividend yield. It is sustainable. The payout ratio is at like a 117%. It's not actually 117%. Yeah, like some little one-time adjustment. But yeah, if we go down here, look at the operating profit. Like this is the crazy part. This is why it says 170%. The net income went negative. It didn't actually go negative. You see that from the operating profit. They had a little one-time adjustment from the Zn acquisition. I can't say that name, but anyway, look at this. They're making like 3 to 4, basically 3 billion of net income a quarter, and then they just return. Or you know what? Let me go back. I want to show you visually how the dividend is actually safe. If it'll, we can pull it up quickly. Oh, then we could look at APLD. Yo, APLD is a NVIDIA-owned company. So anyway, look at this. They made 3.15. We won't give them the benefit of the doubt. They made 3.15 billion of net income just in the most recent quarter. Let's go see how much the dividend costs. Look, the dividend only costs 2.1 billion every single quarter. So if anything, they actually have a little bit of room to raise their dividend. Yo, what up, haha? What's up, man? So here's a cool one. APLD. So that's actually a company owned by NVIDIA. So if we go to the NVIDIA portfolio right here, we can see every stock NVIDIA owns. One of the companies they own is APLD. And APLD just had a huge partnership with CoreWeave. So think about that. NVIDIA owns CoreWeave and APLD, and kind of shocker, they go into a big partnership. Yo, we'll look at LHX as well. But look at this. A lot of people know them for their data center hosting business, but I like them for the cloud service business, which is seeing a very nice growth. I mean, year over year up 219%. I mean, at this growth rate, what's it going to be this time next year? So that's seen some really strong growth. NVIDIA owns a little bit of them. I wouldn't just buy a stock because NVIDIA owns them, like especially like WeRide. This is a pretty dog company, but yeah, that's an interesting one. Pretty growthy. Let's look at LHX. Oh, and Tempest AI. Tempest AI is a really cool one. Oh, and I want to look at TLT as well. So LHX, L3 Harris Technology. So look at that. The stock's at an all-time high right now. Nice. So congrats if you own this one. So space and airborne systems, integrated mission systems. So yeah, this is a industry that is really hyped right now. The aerospace and defense industry. We can see market. Let's see. Net income. Yeah, look at this net income growth. This is so strong. So the revenue, look, revenue is only up 2% year over year, but the net income's up 24% year over year. So what does that mean? That means they're growing this net margin by a good chunk. It grew 21% year over year. So really good growth over there. So nice. LHX, I think they pay a nice dividend too. So Tempest AI, this is a company owned by Nancy Pelosi. So I actually like this one. XO said, hey, just join what happens. Yeah, hey, this is actually a brokerage right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so if you deposit $100, we'll both get some free stocks. But it's my favorite app, lowest fee version that like, and I keep my cash in here as well, earns interest, no monthly fees, it's free. But anyway, brokerage, link tree in bio, first link. But yeah, let me go back to Tempest AI, and I love all the free analysis tools that you can get on here. Like, let's go analyze Tempest AI. We can see where the revenue comes from. Like, check this out. 75% of the revenue comes from the genomics business, and this is seeing just incredible growth. It's up 89% from the previous year, so incredible growth on the genomics and the data and services business. This is up 44% from the previous year, so both segments of business are growing like crazy. They are still struggling to get net income positive, but the trend is getting better. That's the good news. But this growth, I mean, as long as they can keep up this growth, I mean, I'm happy. I mean, that's incredible. 75% year over year revenue growth. So yeah, Tempest AI is cool. And Nancy Pelosi owns them. We can think if we go to her portfolio right here, it shows it. These super investors, they have to make all of their, oh yeah, look, Tempest right here, purchase January 15th, $50 call options. Anyway, these super investors like Warren Buffett, Nancy Pelosi have to reveal by SEC law all their main holdings, every stock that they own. So yeah, we can see Warren Buffett's portfolio. He has a lot of the dividend plays like Coca-Cola, Chevron. So What? Oh yeah. Hey, sorry, Jose. If you want to get this application, it's actually a brokerage. It's in the link tree in my bio, the very first link there. It's free. It's a brokerage called Moomoo. So anyway, um, it's my main. I love doing analysis on here. So let's look at Target. Ooh, yeah. Oopsie. Let's look at Target right here. So this is a great dividend growth company, in my opinion. So check this out. We can go to the dividend right here. You get a 4.5% dividend, and the payout ratio is only 50%. So they actually have room to raise the dividend, which is pretty cool. And look at this PE right here. The PE is a 10. So, and look at the industry average, it's a 39. So if you like look at Walmart, Sprouts Farmers Market, Costco, ridiculously high PE ratios, but not Target. And that's because they're a bit more discretionary than your average grocery store. Look at this. Only 25% of the revenue comes from food and beverage. Then they're in household essentials, apparel, home furnishing, beauty. So a bit more discretionary items than just groceries, because that's more recession resilient. Even in a recession, people are always buying groceries. But also they had some slowing growth. The revenue fell 2.7%. Not great. It's kind of the lifeblood of the company. But I want to show you how sustainable this dividend is. So they pretty much make, if you kind of average it out here, $1 billion of net income a quarter. So that's easy to remember. They're making pretty much $1 billion of net income a quarter. We go to the cash flow statement, see how much the dividend cost, and check this out. Dividend only costs $510 mil a quarter. So they actually have room to raise the dividend, and that made sense. The payout ratio is right at 50%. And since they have leftover money, they're buying back their own stock too. So they're shareholder friendly. They spending a couple $100 million every quarter buying back their own stock. And when there's less shares that exist, it gives you more ownership in the company, more net income per share, because there's less shares to spread out from the total net income. Pretty cool. So, Jets said Nebius over CoreWeave. Hey, those are two NVIDIA companies. So NVIDIA owns both CoreWeave and Nebius. And I do want to go over Nebius real quick, because this is an extremely growthy company. They are kind of new, but check this out. Here's what I mean. So if we go to this company's revenue right here, well, here's the net income. Here's the one thing you do got to be careful with. They are losing like $100 million of net income a quarter, but I think that's okay because of this growth. Look at this. I mean, the revenue went from 11 million to 55 million. I mean, that's the kind of growth I want to see in a company that I'm choosing to just buy and hold for the long run. So extremely growthy there. Let's see. Ooh, Shopify. Yo, since we're over here, yeah, we now go to the Kathy Wood portfolio. And in Kathy Wood's portfolio, she owns, a Palantir reports earnings tomorrow. We got to look at Palantir in a second. But Shopify, man. Shopify is such a great growth company. And Shauna, thanks again for the rose. I really appreciate that. And BPAV, if you want to get this app that I'm on, this brokerage that I'm on, it's in the link tree in my bio. It's that very first link there. So my favorite app for analysis and stuff. But here's what I love about Shopify. If we just go to the revenue growth right here, this is why I love Shopify. They're so growthy. 2019, the full year, the revenue was 1.58 billion. Now it's 8.88 billion. I mean, you can just see it hits a new record every single year. So extremely growthy company, and not just sales, but profits. I mean, look at this free cash flow. They're making a couple $100 million of free cash flow every year, and it's growing, up 56% year over year. And look at this operating profit as well, making a couple $100 million of net income as well. They had a little one-time adjustment this quarter from an acquisition, so it was negative. It wasn't really. You can tell that from the operating profits. So anyway, Shopify is so growthy. That's one I recommend to just buy and hold forever. So really cool one. So Noodles said, what do you think of MRVL, Marvel? So yeah, this is another chip play. And yeah, let's go over this company actually. So they just got net income positive, I believe, and that was fantastic news because this company pays a dividend and stuff. Or actually, let me just go check this out. So yeah, they have a dividend yield, and the payout ratio says negative 23%. It's now finally positive. So let me actually see this. So yeah, look at this net income. They made 200 mil. If we zoom out, they used to lose a couple $100 million every quarter. They just couldn't afford a dividend. Now they can. They do make net income every quarter. Revenue's up 63% from the previous year. So really growthy over here on Marvel Technologies. So that's what I like about them. Let me actually see. Did that meet the analyst expectations? Yeah, they're in line with the analysts. So makes sense. Let's see. Target is a failing company. Hey, yeah, they're still making a bill a quarter. Let's see. RGTI. Riggedy Computing. So I think this is a quantum momentum stock. This isn't really one I'd recommend because if you look right here, this is a $4 billion company. So this whole entire company is worth $4 billion. You're buying a company that literally made $1 million 1 million, 1.5 million of revenue, down 50% from the previous year. So this is not a $4 billion company. And they're losing, the losses are getting worse, but they lost 20 mil this quarter. So this is a company, in my opinion, that I just can't touch. That may be a fun swing trade, but I don't think that's a good buy and hold for the long run stock. Doesn't have too good fundamentals there, in my opinion. I mean, they just have no revenue. So the valuation is nuts, especially on a price, even on a price to sales, it's ridiculous. But I mean, there's so many better like $3-4 billion market cap companies out there, like a Dave, a Powell Industries, a PSIX. I mean, like what's the market cap on this one? Yeah, this is a $2 billion company. So we just looked at Riggedy Computing, a $4 billion company with 1 million of revenue. Well, here's this company right here with half the market cap. If you like Riggedy Computing, you'll love this stock right here. It's AI too. And look at this. They're making a lot of net income every quarter. Look at the growth here. I mean, this is why I own this one. I might be biased because I own them, but look at this. They're making like 20 million a quarter and it's growing. Revenue's up 42. They have no net debt. So PSIX is a really cool one. And also Dave. I mean, what's the market cap on Dave now? 3 billion. Yeah, I'd rather own Dave than. Anyway, let's keep going here. Qualcomm. Hey, yeah, Qualcomm. That's that ship play. So let's check it out here. So Qualcomm, yeah. So this is a nice dividend growth company. Like if we go to the dividend right here, you get a 2.3% dividend yield, and they actually have room to raise the dividend. Yo, hey, Lacey, yeah, this is a brokerage right here. If you want to get this brokerage that I'm on, it's in the link tree in my bio. It's that very first link there. It's an affiliate link too. We'll both get some free stocks. But yeah, first link in my bio, it's brokerage. Anyway, look at Qualcomm. The PE is it's free too. The PE is really cheap. It's a 14 PE. So I mean, that's a really reasonable valuation, plus a 2% dividend yield. And here's a cool metric. Here's their smartphone chip market share. 28% smartphone chip market share. That's really impressive. And also, let me show you the profits this company's making down here. If we go to the net income down here, what was that last stock with an R? Yo, I'll find it out for you right after this. Stock with an R. Marvel Technologies? I don't remember. But yeah, look at the net income Qualcomm's making. I mean, nearly $3 billion a quarter. I mean, $2.7 billion just in the most recent quarter. So they're making a boatload of net income. Should we see how much their dividend cost? So yeah, they're making $2.8 billion on average a quarter. So $2.8 billion of net income. Let's see how much the dividend costs. So dividend only costs $960 million. And because of that, look, geez, they spent $2.9 billion just in the most recent quarter buying back their own stock. So they're spending literally 2x the amount on buybacks than dividends. So anyway, yeah, you should get like 6, 7, 8% plus a year. Oh yeah, compared it to RGTI, yeah, Riggedy Computing, that was it. Yeah, that's one I don't think it's worth $4 billion. I think there's way better $4 billion market cap or less companies can buy and place it. So what do you think? Do you think the market will keep going down? Talking about NVIDIA, AMD. Well, hey, that's the interesting thing about AMD. This week we get earnings from AMD, and I'm very curious to see what will happen. I do own AMD, so we can go over them real quick. So yeah, it's actually my largest holding in here. We have 12.8 shares of AMD. We're up 39% on them, and we didn't even time the bottom on this company. Look, the bottom was 76, and we got in right here. So AMD is doing pretty good. And I want to analyze that company. So they report earnings this week. To be honest with you, I wouldn't buy this one now before earnings. I think they might actually go down on earnings just because they had such a nice run up. But here's what I love about the company. I mean, huge GPU market share. Obviously, we know they sell GPUs, but they're really a data center play because all these other data centers like Amazon and Meta, they're buying AMD and NVIDIA chips to power the data centers. Well, AMD is like, well, hey, we could do that ourselves. We can get the latest AMD chips the quickest because we are AMD and at the lowest cost. So they just make their own data centers. So it's been booming up 57%. That's now the largest segment of revenue for them. And it's done great things for their free cash flow. I mean, look at the free cash flow, up 100% year over year. Net income's really good, 700 mil also this quarter. Absolute fortress of a balance sheet. I mean, like no debt, no liabilities. So yeah, really good. Someone said Ages is my new account. Yeah, hey, this is my second account, by the way. TikTok took down my live access on my main account. So we're streaming on the second account. If y'all want to hit the follow button, I'd appreciate that. And my main account is called Nathan Robert. But anyway, and hey, yeah, but hey, actually, the best way to support me is to watch the stream from YouTube. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. So let me show you. Someone said WOOF Wolf. Oh, this is Petco. That's a cool ticker symbol. Wolf is Petco stock. So let's go see how they're doing. So are they making net income? So this isn't great. They're still losing net income. But look at this trend. It's getting better. Last year, this quarter, they lost 50 million. This quarter, they only lost 11 million. So at this trend, hopefully they'll be net income positive. But nothing's really blowing me away here. I mean, the revenue isn't really growing too much. I mean, can we look at this on an annual basis? I mean, look at this. Revenue really isn't up much. I mean, so nothing's really blowing me away on Petco. I would like to see them get net income positive. So yeah. The Moomoo does not show the overnight market right now. Yeah. CMG, yeah. So Chipotle, yo, has anyone heard of Chipotle before? So, yeah, what up, Eddie? We can look at FuboTV. Yeah, happy Sunday, guys. So Chipotle just reported earnings. I do think that this one just fell because their margins fell a little bit, but they were already at a pretty high valuation. Like they've gapped down and then fell another 5 days in a row. So let's see if we can. What's the PE on this company? The PE is still at 37. So yeah, they have a 37 PE and they lost their growth. So there might be some more slight downside room on this company. Because look at this right here. The revenue only grew 3% year over year. So I get it. It's tough for a restaurant in this environment, but the revenue only grew 3%. The net income actually fell by 4%. So that means they lost their margins. Margin fell 7%. So that's one thing you do got to be careful with. Cash flow also fell 0.2, but I do want exposure to that stock eventually if they come down to a good enough price. I do like that one. Yo, Ishwar, what's up, brother? He said VRT stock, and yeah, we can look at VRT and then Fubo. And United Health. What up? Sonic said IYW for an ETF. I want to look at all these. Yo, remind me to look at them. Sorry if I don't get to all the stocks, by the way. I try not to spend too much time. I only spend like 30, 40 seconds on each stock just so we can get to everyone's. So sorry if it feels rushed as well. But anyway, here's Vertiv VRT stock. They're pretty close to all-time highs. So I think this is like a AI like server infrastructure play. So look at their products revenue. Look at that. It's up 39% year over year. So they're just really growthy. So the revenue's up 39. Let's see. So yeah, revenue's up 35. Net income's up 82%. So that means they're growing their net margins. Wow. Net margins grew 34% year over year. So I can see why this company is near at an all-time high. I mean, those were some good earnings from a financials point of view. Yo, what up, Sign? Hope you're doing good, man. So FuboTV, I heard there was a little bit of like litigation. The DOJ is like stopping the merger between Disney and Fubo or something like that. I don't know. But basically, Fubo is just in the hands of Disney at this point. Disney owns like 70% of the voting rights. This huge inflow of net income was from Disney giving them money. Because before this, I mean, they were kind of burning money every quarter. So basically, I don't really look at Fubo that much. I don't know if I'd really individually hold that one. That stock can't 2x. I mean, the merger's already set at a price. The stock can't 2x or something. So I don't know. Here's Disney. Actually, on the other side of the bet, I own 15 shares of Disney. So that's kind of my side of the bet here. So anyway, yeah, we got this one at a great price during that little crash down there. But yeah, Disney isn't one I'd really recommend either as a great buy and hold play. So what was that ETF? Yo, try not to spam there, Ben. I'll get to your stock. Don't worry. There was an ETF I wanted to look at. Oh, I'm not going to be able to find it. Dang. Oh, IYW. There we go. I found it. IYW. So what is this right here? Let's check it out. Oh, we can look at UPS too, Cloudflare. So here's IYW, the iShares US Technology ETF. So look at that. It's done really good, pretty close to an all-time high. It's probably just like the NASDAQ. So yes, dang. So if you put $100 in this ETF, you put $100 in, $17 of that goes to NVIDIA. 15 to Microsoft, 12 to Apple. So it's a bit NVIDIA heavy, but it's probably just market cap weighted. So let me go to ticker symbol NET. Then we'll look at Cloudflare and then VIOT. Yeah, Ben, don't worry. I got you, brother. We'll check it out. So here's ticker symbol NET right here, Cloudflare. This is your cybersecurity play. I love this company. And if you don't know, basically, I want to pull up a picture, but They handle their internet traffic through lava lamps, like real lava lamps that you can imagine. So anyway, such a cool company. Literally 17%, nearly 20% of all global internet traffic goes through Cloudflare in one way or another. Huge Internet of Things cybersecurity play, and the revenue just hits a new record every quarter. I mean, go to on an annual basis, you can kind of see the trend here. I mean, that's what you want to see for a growth stock. So yeah, I do like Cloudflare, and I can see why they're at all-time highs right now. So VIOT. So let's see. I haven't heard of this one. So yeah, we don't really cover these kind of stocks on here. Like the whole company's worth 200 million. So I would be careful with this one. But it looks like there was some really good news right here. So congrats if you own that one kind of before all that news. But this is a China. All the revenue comes from China. First of all, yeah, oh, we're looking at it in Chinese currency. Anyway, nothing's really blowing me away here. I mean, they did make 7 mil of net income this quarter, but that's 2024 Q4, so that's like delayed. Anyway, I don't know about all that one. Yo, no way, Eddie. I really appreciate that. He says, subscribed. I'll be watching your trading. What time you put? Hey, yeah, we try to stream every day. This is actually our second stream of the day. So if you want to hit the subscribe button with notifications, we'll be streaming tomorrow as well. By the way, I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. But yeah, best way to support me is just subscribe to the channel. All right, so here's UPS. So this one I think has a risk of a dividend cut, and that's what I'll kind of explain here. But I think they're a great company, but the dividend is eating up all of the money that they're making, which is really unfortunate. And also, my internet is terrible. I think someone's like downloading a game or something. I don't know why, but as I apologize. But here's UPS right here. They kind of reported earnings and then they kept on bleeding down for 3 more days, which isn't great. So check this out. You go to the dividend, they have a 7.7% dividend. I mean, you're supposed to average like 7.7% of your money a year in the S&P 500. So you're getting a whole entire S&P 500 year of returns just in dividends. And it's not really sustainable. And you can kind of see that in the stock price. Like, yeah, you get 7% in dividends, but the stock hasn't appreciated that much. Here's the thing that's at risk. Here's kind of the bad news. So if we go to the net income, they're making 1.2, 1.3 billion in net income. So remember that number. They made 1.3 billion of net income this quarter. And check this out. The dividend cost 1.35 billion every quarter. So literally all their profits got eaten up by the dividend. So they have no leftover money to like invest in the company or do buybacks or do anything. So and the cash flow tanked. Yeah, so I think UPS is a tough buy. I think they are at real risk of a dividend cut, to be honest with you. Like they literally couldn't afford it the past 2 quarters unless something changes. So, all right, let's see here. NVO, when Andro becomes public, will it move like Figma? Yo, Figma had a great IPO. Yo, Will said Lululemon. So Lululemon stock, this one has been sad. I mean, look, when they reported earnings, they gapped down and then they bled out for another 10 days, went up a little, and now they're bleeding out again. So Lululemon's been through some tough stuff. And, they just sell a commodity. They just sell shorts and leggings and stuff like that. Actually, my favorite pair of shorts that I own are Lululemon, and I only own one thing from Lululemon, and it's those shorts. But look at this net income they're making. It's actually pretty good. They're making like 400 million of net income a quarter. Last quarter was really strong, 750 million. They're actually, I think, in a better position than Nike right now. So, but here's the bad news. So look, the actual revenue increased by 7. So the revenue's up, but the net income fell by 2%. So what does that mean? That means the margins got hit. Margins fell by 9%. So that's the one thing I would be careful with. They did kind of leverage up a little bit from 38 to 42. But I think this one's a bit oversold. The PE is like a 13 or something. Let's see. Yeah, the PE is a 13.15. That might be in line with the industry average. Well, industry average is a 21. All right. Let's see. What's your favorite cybersecurity company? It would be PANW, CrowdStrike are good ones. I'd probably go with PANW if I had to just pick the safest one. It's also one owned by Nancy Pelosi. So if we go to Nancy Pelosi's portfolio, actually her smallest holding is PANW, Palo Alto Network. It's 2% of her portfolio. And here's what I really like about this stock. Cybersecurity is an industry we're always going to need. AI is getting better. Hackers are getting better. So we need better defense. And look at this. 53% of the revenue comes from their subscription model. And I love subscription model companies. And look, it literally just hits a new record every quarter. I mean, this is the kind of stock that I'd want to own for the long run. So just hits a new record every quarter. Uh, Sharo said, "What app is this? How do you find this?" Hey, I'm actually on a brokerage right now. So if you want to get this brokerage that I'm on, it's in the link tree in my bio, the very first link there. It's free. It's my favorite one for analysis. So yeah, look at this. So half the revenue comes from their subscription, and then they got support and product revenue. 63% of the revenue comes from the US, so they got some international exposure. But yeah, they're making hundreds of millions in net income every quarter. Free cash flow is really good as well, like 2 billion plus of free cash flow a year. So this is probably my favorite cybersecurity pick that you can kind of just trust. It's like the biggest name out there. Yeah, 115 bill company. So pretty cool. If UPS fired a lot of employees, should the dividends go up? The dividend won't go up. The EPS will go up. I don't think UPS needs to raise their dividend. Right now, UPS is a 7.7% dividend. I don't think investors are upset with them uh, that the dividend's not higher. And I don't think investors want the dividend to be higher because they can barely afford it. So Kingdom said QQQI. Is that the QQQ income? So yeah, basically this ETF right here sells covered calls on the NASDAQ, which isn't really an asset you want to be selling calls on in the long run because it appreciates so much. So you'll definitely underperform the QQQ, but because of that, everyone knows that they pay a boatload of premiums. Whenever you sell those options, you get a boatload of premiums, and those premiums are then just given to you as a monthly dividend in this ETF. So they have a crazy 15% dividend. That's because they sell calls on the NASDAQ. But again, I would actually probably expect just a normal QQQ to total return outperform this in the long run. So you're basically buying that to maximize your dividend income. Let's see. VEEV, is that Viva? Which I don't even know what Viva is. I just remember. Oh, they're on my watch list actually. So let's check out Viva Systems right here. So actually, there must be something I like about this. Let's see here. So subscription service. Hey, another subscription model company. I love this. And look at that. It just hits a new record every quarter. This is great news. I mean, let's go to on an annual basis. I mean, yeah, just it's at a record. So all-time best revenue. And look at this net income. Whoa. Whoa. So look, the six, I get so hyped over this. Look, so the revenue grew 16% year over year. So the revenue grew 16, but the net income grew 41. I mean, this is why the stock is doing so good, I think. I mean, this is some really good net margin expansion on this company. So, hey, Shauna, thanks so much for the 9 roses there. Did not see that link in your link tree bio. Wait, is there no link tree in my bio? Can someone check that for me? If you go to the link tree in my bio, it's the very first link there if you want to download this app I'm on. It's called Moomoo. But hopefully, it's free. There should be a link tree there. That would be not good if there's not. Can someone check for me? Yo, Connor, can you check for me? Thanks for subscribing to the second account. Yeah, I'm on my second account right now. They done banned my main account from streaming for 3 days. So, yeah. All right, let's keep going here. Rootstock, ROT. I think that's an insurance name. Yes, there is a link tree there. Yo, thanks so much, Unlimited. I'm just making sure. Yeah, so anyway, if you want to get this brokerage that I'm on, this app that I'm using right now, it's in the link tree in bio, first link there. People keep asking, so sorry. Anyway, let's keep going here. Here's Root. So direct to consumer insurance. So yeah, this is why everyone's loving this stock. I mean, they're super growthy. Look, the revenue went from 74 to 350 million. I mean, just an absolute monster of growth over there. So yeah, are they making net income on that? So yeah, look at that. The revenue's grown like crazy, and so has the net income. They used to lose net income every quarter, tough buy. Now they're making net income every quarter. So this is a profitable company growing their insurance like crazy. So they could be like a competitor to Oscar or something. Someone said American Express. So yeah, if we go to Warren Buffett's portfolio right here, because he has to make all his holdings public. Look at this. American Express is actually 15% of his portfolio. It's his second largest holding right behind Apple. So American Express is actually a really good dividend yielding company. And hey, I have an Amex card, so I've probably given them some money. And look at this. So first off, you get a 1% dividend with this company, and the payout ratio is only at 20%. So they actually have a lot of room to raise their dividend. And look at this PE. The PE is a 20. So, a pretty fair PE ratio could stretch up to like a 22. And if you go to the net income down here, yeah, they're making nearly 2.5 to 3 billion of net income every single quarter. So AXP is a nice dividend growth stock, and it's kind of backed by Buffett. All right, let me go to the shareholders here. Let's see. Go to shareholders. Yeah, Berkshire Hathaway, which is Warren Buffett's company, is the largest shareholder of American Express. So that's pretty cool. All right. Favorite insurance stock right now? I like PGR and SLDE. I totally agree, man. I actually own PGR 2.4 shares. We're down on our position, but I really like Progressive Corp. Let's see how we're doing in the overnight market right now, really quickly. Yeah, we got some winners and losers in here. And actually, let me go to the Robinhood account, then we'll get back to the stock analysis. So we are down 0.12% in the overnight market. Whoa, look at the SPY. Yo, congrats if you own stocks. Get ready for next week. Market's up 0.3% right now. All right, anyway, let's get back over here. So let's see. Ooh, DCTH earnings. Heck yeah, Connor. Let's go do it. So if I actually go back over here to my Robinhood portfolio. If I go to my Roth IRA right here, my Roth IRA, I just bought a little bit of this stock right here. Again, this is such a risky company. You don't want to have you can't have a huge position in this stock just because they're so risky. But I have 13 shares of this stock. Here's why I think, and I normally don't cover these kind of stocks. This whole company I think is worth 400 million. But I think it's worth purchasing, in my opinion. Again, not financial advice here, but kind of if you look at the top, kind of look at the top right here, the market cap. So as you can see, this whole entire company is only worth 368 million. So remember that number. The whole company is worth 368 million, and they have $58 million of cash on hand with no debt at all. So this is a debt-free company, $58 million of cash, and look at the growth here. Super growthy company. I mean, it's easy to compare to small numbers, but look, revenue went from 3 to 20. I mean, whoa, that's some pretty good growth. And on that 20 mil, they made $1 million of net income. So probably by this time next year, they're going to be making net income every quarter. I know they're literally making interest on their cash. They make this liver therapy kit. It's called a Heptazo kit. And it's just seen some really immense growth. So anyway, DCTH is one that even though the stock isn't doing too good, the fundamentals are at an all-time high, all-time best. So AD Nan said XEQT. Let's check this one out. Dang. Sorry. Hopefully no one heard that. Okay. Wait, is this the right one? XEQT. Okay, so this is an ETF right here. Let's go to its top holdings. Total stock market ETF. So yeah, it kind of just looks like an S&P 500 competitor. Nice. Okay. Aslin said ATD stock. What's ATD? Let me know if you're talking about this company right here. Alimentation Kushi. I don't know what that is. Let me know if that's a company you're talking about. Is it Canadian? Let's see here. Oh, Intel. Oh, hey, we can look at, I want to actually analyze Progressive first too. So I do own this company as I just showed. I did want to analyze it for you because they're just such a great insurance company. We are down on them. So check this out. I own Progressive Corp, 2.4 shares. We're down 4%. Hey, by the way, I just like being fully transparent. No other streamer, I feel like, will show you this. Like, here's my lifetime return. We're only up 14% all time. We've definitely underperformed the market. So, yeah, if you got any questions for me, let me know. I'm fully transparent. And I sell nothing either. I have no course, book, Discord, WhatsApp, Telegram. I sell nothing. Watch out for people impersonating me. But let's get back to the analysis. Here's Progressive Corp right here. Here's why I think this one is a fantastic buy and hold forever stock. No reason to ever sell out of this stock. It's an insurance company. We can see their personal lines right here. I mean, it literally just hits a new record every year, every quarter. Look at this. It's up 23% from the previous year to $19 billion just this quarter. And on that $19 billion, they made $3.2 billion in net income. It grew 117%. They're the most profitable they've ever been. And they also have a dividend. So look at this. They made $3 billion just this quarter. So kind of remember that number. They made $3 billion, and the dividend literally only cost, that can't be right. Okay, so yeah, this was the special dividend. Their normal dividend only cost $59 million a quarter. If you're wondering, why does it say $2.7 billion and $500 million? Well, that's because every single year they return money to the shareholder through a special dividend. So normally they only pay 10 cents a quarter, but every January they do a special dividend to kind of reward shareholders. It was $4.50 this time. Last time it was 75 cents. So just a shareholder-friendly company. And look at the PE ratio. Hold on. I didn't even show you the PE multiple. So PE ratio is a 13. Industry average is a 12. I think they deserve to trade at a little premium to the average because they're progressive, they're huge. But anyway, great insurance company to buy and hold forever, I think. Okay, so he said it's a convenience store that wanted to acquire 7-Eleven ATD stock. Let's check it out. ATD. So alimentation. So this is a Canadian company. So normally, yeah, it doesn't let me trade this stock or anything, but let's go analyze them and check them out. So they're a $66 billion company. So yeah, they're huge. Wow. Let's see, net income right here. Wait, what? That's in US dollars, yeah. So they're making a couple hundred million a quarter, yeah, but it isn't really growing too much. Like it did fall 3% year over year, but still not too bad. They're making a lot of net income every quarter, 1% dividend yield. That's probably why the stock is kind of flat for the past couple, for like the past year here because the net income really hasn't grown, but they're interesting. Hey, another stock I added to the watch list. Where is it? Is it can't remember the name. I think I had might be JBS. No, I don't remember, so I won't talk about it. All right, so let's see here. I just started it. This is what I got. Let me know. VOO, QQM, SCHD. Yo, Joe, that is perfect, dude. And 5% in Amazon, Google. Yo, Joe, you're doing great, dude. That's a perfect portfolio, man. Having like you have a good backbone of your portfolio and some great ETFs. Then you play around with some of the individual stocks that you know will do good in the long run. Stuff you use like Amazon, Google. I own those companies too. Here, if I go to my main account right here, invest in what you know, like Google, Meta, McDonald's. I even got some McDonald's, United Rentals, um, Constellation Energy. That we have our utility bill through Constellation Energy. So hey, why not own some of them? They're actually my largest holding now. They're worth $5,000. We're up a crazy amount on them, 63%. They're the largest nuclear play. So Jodaz said APP. I think you're talking about AppLovin, or you're asking me what app is this. If you want to get this app, it's in the link tree in my bio. It's a brokerage called Moomoo. But anyway, here's AppLovin right here. AppLovin, this is an incredible growth company, and this is the main thing you need to look at is the advertising revenue. 80% of the revenue comes from their advertising business, and this is the best part. This is why they deserve all the hype and the high PE. They're so growthy. I mean, it's a 1.2 billion of advertising revenue this quarter, and out of that, they made 830 million of free cash flow, more than doubled. The net income was 580 million, well more than doubled. I mean, just incredible numbers from ticker symbol APP. So while the valuation is a little high, I think they do deserve it as long as they can keep up that growth rate. Can you run through your Moomoo account? Yeah, I don't own much in here. It's a pretty boring portfolio. But yeah, this is my 7-stock Moomoo portfolio. And I also have some cash. That's what I love about this brokerage. You keep your idle cash in here, it earns you daily interest. So my $700, maybe 23 cents of interest today. It's free. If you want, by the way, you want to get this brokerage, if you go to the link tree in my bio, go to the first link there, you can get this brokerage. If you deposit $100, we'll both get some free stock. So it's an affiliate link too. Help out the channel. I also have a small cap Canadian. How's the market looking in your opinion in the near future? I don't, I think we're probably going to be flat for a while in the market. Um, I there's some overvalued stocks and some undervalued ones, but the market seems a little overvalued right now. But I'm still going to be buying stuff. Like I just bought a bunch of Coke Consolidated. I mean, you can kind of see my buy orders. That's what all those buys are right there. But let's keep going here. Someone said, Big B said TWLO. Is that Twilo? I think Kathy Wood owns this stock. So let's analyze them. I've actually never looked at this stock before, I believe. I've just heard about it. Let me go to shareholders. Let's see if that's true. Nope, I don't see Kathy Wood on there. Maybe she sold it. But first off, really good balance sheet. How much cash do they have? Let's see. $2.45 billion of cash. And look at that. They're finally net income positive. So look, they used to burn a lot of money, a couple hundred mil a quarter. Now they made 20 million this quarter. And that was real as well. That's great. They're a bit of slow sales growth. Like revenue only grew 12%. I guess that's not too bad. But hmm. I would just like to see a bit more higher growth. I do like that they're just now getting net income positive. This stock reminds me a lot like a PayPal looking stock, a DocuSign. I look at DocuSign as well. I mean, down bad from their 2021 price. So, or like a Zoom as well. Actually, have a Move right account. Been watching you for a while. Do you have any moves, purchases, sales plan? Hey, not really. Um, I'm looking to just add more to my positions, like buy more Amazon, buy more Coca-Cola Consolidated. And this is my buy and hold portfolio. Once I buy a stock in here, try not to ever sell it. Oh yeah, look, hopefully I don't show anything I'm not supposed to, but I have 2 pending orders in for co-consolidated. I'm buying 2 more shares right now. So, or when the market opens, that'll cue the order in. And by the way, here, I'll show you my return since I don't got nothing to hide here. Year to date, we are up 40% versus the S&P only up 6%. If you're wondering, whoa, how did you get those crazy gains? You could thank this company right here, FIX. Absolute monster of a performer for us. And actually, and this is where I've been buying all these buys, or where I bought it. Comfort Systems has done really good. And also, this is a huge company that had a partnership with NVIDIA, is Amphenol Group, supplying NVIDIA with copper cables. NVIDIA's new NVLink spine uses 2 miles of copper cables, mostly ordered from Amphenol Group, which is pretty cool. Anyway, let's keep going here. It's Leo said SOUN and Dollar Tree stock. Hey, we could look at that one too. But here's Sound on AI. I'll be quick about this one because they're kind of a meme stock. But if you do own this stock, there's only one thing you really want to watch if you're just like bullish on the stock for the long run. It's the subscription revenue right here, which has seen this just most incredible growth. I mean, look at this year-over-year growth rate. It's up nearly 600% year-over-year. Again, we're kind of comparing from small numbers here, but as long as they can keep up this growth rate, like what's it going to be this time next year? A subscription model or a subscription revenue, so like reoccurring. So that's great. So we just want to see them keep up this revenue growth. They are losing some money right now, but it's okay at this incredible growth rate that they have. So that's the only thing you want to watch there. What about Figma? Yeah, hey, what up, Tio? Yeah, Figma, they just IPO'd. I don't know what thoughts on that. Wait, what was that? FIX? Oh, by the way, if you missed anything, and like I'm talking too fast, I do apologize, just so we can get to every stock here. But if you go to I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the Linktree in my bio. You just type into YouTube Nathan Robert, and I'm streaming on there as well. After the stream's over, you can replay it. You can rewind it right now if you want. Anyway, that's the best way to support me as well. I sell nothing. I don't have a course book, Discord, Instagram. I have nothing. Watch out for people impersonating me. The only thing I do have is a YouTube channel. So want to help me out? Subscribe to the channel. Best way to support me. So let's keep going here. I missed it. Dave and Intel in Texas Instruments. We'll look at Intel first. And I feel bad if you own this stock because here's the truth. Intel is the same price that it was back in 1998. So if you bought the stock in 1998, you're actually flat on your position. So this has been a terrible performer. And a lot of people like them for this GPU market share. Like, look, they have a 66% PC GPU market share, or it went from 66, now it's 63. But that's not the real reason they're falling. It's really because of just the losses of money. They're burning a boatload of money. Like, look at this, the free cash flow. They're losing billions of free cash flow a quarter. Net income's not good either. I don't know how, but they lost 17 billion just this one quarter, 3 billion the most recent quarter. So they need a turnaround. They need to get net income positive. I mean, they're losing a lot of money. Should I start a YouTube channel? I'm 19 with the 10K Moomoo account. I'd like to grow. Yo, Kenneth, heck yeah, dude. I think people would love to hear your story. You should go to my first videos. They're terrible. I started making videos when I turned 18. Any other stocks like FIX? So not really. The only other stock that is like FIX, looks exactly like it, is ticker symbol EME. These are the only 2 HVAC companies. Pretty much both are at all-time highs. But FIX and EME, these are HVAC, heating, ventilation, air conditioning companies. And and they also do the electrical work. Like, look at this. This is why this is my largest holding. Like, their electrical segment has just seen incredible growth. I mean, there's no other company like this. I mean, the electrical revenue grew 50% from the previous year. Actually, here's the best part. The EPS, the net income per share, after growing 93% the previous year, it grew 74%. And look at this. The EPS is just the net income per share. The net income was up 72, but the EPS was up 74.6. That's thanks to their stock buybacks. So there's less shares that exist, making the EPS go up slightly more than the net income, because the EPS is just the net income per share. Less shares that exist, more net income per share. Pretty cool. Anyway, they're a buyback friendly company. They've risen their dividend for 4 quarters in a row. I love FIX. Wouldn't buy them right now at really all-time highs. But anyway, I have a bunch of videos on how I go over them. Why Coca-Cola? Why co-consolidated instead of Coca-Cola? Just because this one, here's what's really cool about the stock. And as you can see, I've kind of been buying the dip on them. Here's one really interesting fact. They're at a very low valuation. So look at this. Remember this. This company gives you a 0.7% dividend yield, and it's only a 5% payout ratio. So a 0.7% dividend yield, a 5% payout ratio. If we go to Apple, Apple has a lower yield, a 0.5% yield, and 3x the payout ratio, a 16% payout ratio. So very low valuation on that company. They've bought back, Coca-Cola Consolidated has bought back 9% of all the shares that exist. I was kind of just talking about FIX and their buybacks. Coca-Cola Consolidated is another insanely shareholder-friendly company buying back their own stock like crazy. So actually, I'll show you that. Look, it should, yeah, so look at this. This is what I love about buybacks. Net income grew 8% year over year. Net income grew 8, but your return to net income per share grew 16%. That's because they literally bought back 9% of all the shares. It's insane. Look at, they're printing free cash flow and net income. They can easily afford to do it. So anyway, let's keep going here. Can you look at minerals like TMC or UUU? Yeah, honestly, if you're looking for uranium, I would go with ticker symbol URA. That's the uranium ETF. But the TMC company, that's a revenue-less startup. So I wouldn't really go with TMC. So this is the metals company. They basically make these robots that go in the water and at the bottom of the ocean, like suck up the nickel and iron and zinc and stuff from the water. But they're still a revenue-less company. It's a startup. We go to revenue, it says no data because they've never sold anything, not a product or a service. So it's a startup company losing 20 mil a quarter and they've leveraged up. Like, look, they used to have more assets than liabilities. Now they have more liabilities than they have assets. So I wouldn't buy that one particularly. But if whenever they do start making revenue, I could see the stock like rocketing off that. But I'm just going to stay away from that one just because I don't know if they can pull it off. That's the thing you got to ask. Can they pull it off? If they can't, it's a zero. You're losing 99% on that investment. KNSA, let's see. KNSA. It's not like Apple. Like if you buy Apple, it's impossible for Apple to lose like 90% of its value. Like it might lose 50% or 60%, but anyway, some of these stocks can. Again, none of this is financial advice. I'm not an expert. I don't sell nothing, no course book. The real boy said, what app is this? I guess the one thing I do have is an affiliate link. So, hey, if you want to get this app that I'm on, I'm actually on a brokerage right now. So if you want to get this brokerage, if you go to the link tree in my bio, the very first link there, it's my affiliate link. If you deposit $100, we'll both get some free stocks. I think we both get 5 free stocks. So anyway, you want to get this app, link tree in bio, first link there. But let's keep looking at this stock right here, KNSA. Look at this. I love this actually. Look at the revenue growth. The revenue is up 44% from the previous year. That's very strong growth. And on that revenue, they actually made net income, 17 million in net income. And they have a really good balance sheet. Hold up. You know what? I'm actually going to add this stock to my watch list. This is a very good company, actually. I love the growth here, a $2.4 billion company. I can see why they're pretty much at all-time highs right now. Fundamentals are really good. You like Dave for earnings report this week? So yeah, we get Dave and AMD, Palantir tomorrow. We get a lot of earnings this week. So a lot of my portfolio does report earnings. So it'll be very interesting. But here is Dave stock, Dave Inc. This has actually been one of my best performing stocks that I've owned. And we just bought this one like in April. And here's what I love, just the growth. So growthy. The revenue's up 50% to 107 million. And on the 107 mil of revenue, they made 28 million of net income. So they have like 25% net margins. Yeah, 26% net margin, incredible growth of the EPS, the free cash flow. That's what FCF stands for, free cash flow. This has been an incredible performer. And they've deleveraged their balance sheet. So look at this. The liabilities used to be 45% of all the assets. Now it's only 36 while growing the assets. So, Dave is just such a great growthy company. I love them. And I do own them. So actually, let me show you this. I might be biased, but yeah, there's ticker symbol Dave. We got 4 shares left. Yeah, we kind of we bought 7, sold 3 of them at 272. What's it at now? 232. Oh yeah, look, there are the sell orders. And we bought all our shares right here. But I plan to just hold on to my 4 shares for like the rest of time. Honestly, I don't think it'll ever go back to my cost basis. So why not just hold it forever? Hopefully get more than 7% a year. Learning a lot from your live. Yo, Brian, thanks so much, dude. Yeah, dude, if you learn about investing while you're younger, your future self will thank you. Yeah, they don't really talk about this stuff in school, like financial literacy. I think that's a class you can take. Yo, Tio, thanks again for the rose, dude. I really appreciate that. Heck yeah, we can check out SCHD. That's that dividend growth ETF. So if you're looking for like a more dividend, a higher dividend like asset, SCHD is a really cool one. So if you go to the dividend right here, you get a 4% dividend. So, or a near 4% dividend. So that's really cool. If you're wondering why the dividend go from 99 cents to 50, that's because they did a 2-for-1 stock split. So it's not really real. But anyway, I like to judge an ETF by its top holdings, and here are its top holdings. They got a lot of the higher yielding assets like oil stocks, like ConocoPhillips, a Chevron. That's a Warren Buffett stock. Cisco is a really cool one as well. Yo, dude, no way, Denise. That was so cool. Thank you so much, Denise R. You're so nice. So if you got a stock you want me to look at, let me know, Denise and Tio. Thanks so much for the little gifts there. I really do appreciate that. But yeah, SCHD, they got PepsiCo, AMZN, some of the healthcare plays. Verizon has a crazy dividend. Like, here's the thing, though. Like Verizon, we'll actually click on this stock right here. Here's why you got to be careful with some of these higher yielding stocks. What's your thoughts on SoFi and Datadog? Yeah, we'll look at Datadog too. So check this out. If we go to Verizon and the dividends, this is what's crazy. If you buy the stock, you get a 6.3% dividend. So a crazy dividend. But if you kind of go to the monthly chart, this is kind of the unfortunate part. Verizon is the same price that it was back in 1997. So you got to be careful. They don't really outperform in the long run, but you do get the that's just Verizon though specifically. A lot of their other holdings, I love their other holdings. How'd you build all those portfolios? Did you invest money from a job? Yeah, dude. Heck yeah. Talking about a stock. I remember you talking about a stock that benefits from licensing for NVIDIA data center. Oh, I think I was talking about APH stock right here, Amphenol Group. This is the company, NVIDIA, their new NVLink Spine product uses Amphenol's copper cables. It uses 2 miles of copper cables in this little product. So pretty cool. And let's see, TSR said SNAP stock. And someone said, did your TikTok account get banned? My main account is banned from live streaming for 3 days. So I'm on my second account streaming right now. Yeah, I'm streaming on YouTube and TikTok right now. My second account on TikTok is called Stocks Alive if you want to follow. But I'd prefer you stay on YouTube because I'm trying to, don't go to the TikTok. Yeah, if y'all want to support me, go from the TikTok stream to the YouTube stream. YouTube channel is called Nathan Robert, also in the link tree in my bio. But anyway, here's Snapchat. Did you guys know Snapchat is publicly traded and the stock hasn't done too much since its IPO? Same price that it was back in 2019, but they're finally getting profitable. Oh, check this out. We get some data here. So this is cool. Daily active users are 460 million. So that's a lot of daily active users. But look at this net income. Here's kind of why Snapchat's been dead money for such a long time. They're losing so much money. I mean, literally a couple $100 million of net income every single quarter. But the trend is getting better, like 54% better year over year. They did make net income last quarter, which was really impressive. So the free cash flow is getting better too. It's up 2x. So or 3x. So yeah, Snapchat, I'd be careful. Ooh, Tencent is the largest holding. I didn't know that. That's another publicly traded stock. So you don't like SCHD? I do like SCHD if you want dividends, but SCHD will not outperform the market in the long run. So hey, someone said what app is this? Yeah, hey, if you want to get this app, it might be in the description, but if you go to the link tree in my bio, it's the very first link there if you want to get this brokerage that I'm on right here. It's my favorite one for analysis. Like, let's go analyze SoFi on this app right here. And it's a free app and it's an affiliate link too. So if you do deposit some money, we'll both get some free stocks, but you don't have to deposit to use the tools. Anyway, here's SoFi Technologies. This stock has done great, and I think it deserves to be doing this great. And I think it might even continue to keep on doing well. That's because they're so growthy. This is the kind of stock I want to hold because they're a fintech. They have their own banking charter. I do own this one, so a full disclosure, I might be biased. I do own them, but look at this. Their financial service business is the best part about the company. It's been growing ridiculously. It's up 101% from the previous year, literally to a new record. I mean, if you kind of look at this on an annual basis, I mean, for the full year of 2020, it was 11 million of revenue. And now it's 820 mil, just in the most recent quarter, 300 mil. And that's just one segment of the revenue. The lending business, their student loans have been doing great too, but they're just such an innovative company. I mean, revenue's up 42. They made 100 mil of net income this quarter. People are really starting to take SoFi serious, and I'm surprised they're not actually doing a little bit better. So yeah, there's SoFi. Here, I'll show you my position as well, by the way. I regret every share I've ever sold, but I have 24 shares of SoFi left in my Webull account. But yeah, Palantir reports earnings tomorrow. We can check that one out too. And let's look at Astera Labs real quick. ALAB, and then we'll look at Palantir. So ALAB. Okay, so Uh, so here we go. Astera Labs, this is one on my watch list. I really want exposure to this company actually because they're everything that I want in a stock. They're super growthy. So look at this revenue. I mean, it's up 144% year over year. And same with the net income. On that money, they made 30 mil of net income this quarter, 24 million last quarter. And look at this absolute fortress of a balance sheet. I mean, no debt, assets grow every quarter. I mean, this is what you want to see. Cash flow, year over year growth rates are off the chain. So, Astera Labs, I can see why they're doing so good. And I think they deserve it. I'd maybe put that one on the watch list. The great financials there. So, Ebeni, Abini said CARG. So, let's check it out, man. So, Car Gurus. Um, I didn't know they were public, or I don't even know this company, but I feel like I know them for some reason. So they're a $3.15 billion company. Let's go see how they're doing. So U.S. marketplace, net income. So they are making net in. This is the great news, actually. They are making net income every quarter, and it's growing as well. So revenue is only up 4%, but net income grew 80. So yeah, they really are growing their net margins. 10% net margins now, double-digit margins. They're interesting, actually. I do like them. I mean, they're a bit slow growth. I mean, the revenue, what was it? Just a 4% revenue growth, but the margin growth there is really strong. That's interesting. Um, let's see. Oh yeah, Palantir earnings. I wanted to get to them. We have not looked at Palantir all night. We've been live for an hour and 30 minutes. What are we doing? Yo, Juanito, I didn't even see that. Thanks so much for the rose there, man. The heart gift there. I really appreciate that, Juanito. So let's look at Palantir right here. So this is another really great company, but the valuation is just too high right now. So if we look at them on a price to sales, so not price to net income, not the PE ratio, but the price to revenue, it's 117. So the revenue would have to double for this to be somewhat reasonable. But look at this right here. This is why people love them. Half the revenue comes from the government. I mean, so many police stations are using Palantir software. And I mean, the government revenue is up 45% from the previous year, literally to a new record. So incredible government revenue growth. And same with the commercial revenue. Commercial revenue is up 33% year over year. So both main segments of business are growing like crazy, making net income every quarter, and another, monster balance sheet on Palantir over here. So yeah, that's what's cool about them. I do really like Palantir, but I think the valuation is too high. But I guess we'll also see what happens on Monday. Literally in 24 hours from now, Palantir is either going to be up or down a bunch from their earnings. What's your number one stock then? Well, I think you mean, what do I recommend the most? I don't know. This is my largest holding though, ticker symbol FIX right here. It's worth 8,300. It's my largest stock out of all my portfolios, largest amount of money. So someone, Brandit said Tesla long-term thoughts, and it's not great to be honest with you. So hold on. Oh, there we go. Okay, so here's the thing. This company trades at a pretty high valuation. So let's see here. I think like 180 PE ratio. So let's check it out right here. I'm up big on Snap, undervalued. Hey, nice, dude. So here's Tesla right here. I want to see the PE, not the price to sales. So yeah, look at this PE. It's 180 versus the industry average of 24. So it's okay for a company to have a high valuation if they're high growth. But Tesla, unfortunately, just lost all its growth. So we can kind of see their total vehicles delivered here. I'm just going to judge Tesla the same way I would any other company. And look at this. Their vehicles delivered are down 14% year over year. We can kind of see that, if we go to the automotive business, which is 88% of the revenue, it's down 12% year over year. So it's down by double digits. And the energy business as well, down 7% year over year. So high valuation, margins are falling. They're doing a bit of accounting tricks. Like, look, the operating profit was 920 mil. Net income was 1.1. I don't know how it was higher. They constantly do a lot of accounting tricks. Like one in particular, like look at this net income right here, like 7.9 billion. That wasn't actually real. They never had that. Anyway, I get though. A lot of their market cap comes from their Tesla, Cybercab, the robo-taxi network, and the robots in the future. But it's hard for me, in my opinion, to just pay that valuation now. It's a high premium to pay. All right. Palantir too risky for me. I heard they're using AI to background check everyone. Oh yeah, hey, I heard ICE is using Palantir. I heard that too. So some people ethically don't like that one. So yeah. All right, let's see. Do we SBET, BBAI? I think I can't really talk about this sector right here. So, hey, look at this. I'm reading this article at the top here. SBET acquires 15,000 Ethereum. And so I guess they have a lot of crypto on hand. Let's see their balance sheet actually. So yeah, here's their balance sheet right here. Anyway, I guess they just got a lot of crypto on hand or something. Maybe they trade with Ethereum. I don't know. Is this Nathan Roberts' second account? It is, Dino. So my main account, Nathan Robert, is live stream banned for 3 days. And actually, I wonder if they appealed me. I don't really want to go check. I don't think I can check. Actually, I can on my second phone here, but let me go do that. I might switch accounts if I might go start streaming on my other account if it's unbanned. But anyway, let's keep going here. Yeah, hey, thanks, Dino. Yeah, if y'all want to hit the follow button, we go live every day. If I hit live. Wait, live access suspended. Did they permanently? They might have actually permanently banned it. Oh well. You know what? That's why. Hey, y'all want to help me out? Go subscribe to the YouTube channel. Oh, it's still under review. It's been 2 hours. Oh my goodness. Okay. Anyway, let's keep going here. AMD. Yeah, AMD reports this week. You know what? Let me go to the earnings hub real quick. I just want to see what reports this week, or I'll go to my watch list just so we can see the important stuff that reports. So watch lists confirmed. So here's what reports earnings next week. Tuesday, we get AMD, Caterpillar, Zoetis, Super Microcomputer. I own some of them. Ooh, Wednesday's cool. Look at that. We get NVO, which is Ozempic, and we're going to be streaming for this as well. Ozempic reports earnings. Disney, which I own. I own Disney. Here, I'll show you that real quick. There's my Disney position. 15 shares of Disney. Not too shabby. And McDonald's. So McDonald's is another stock I own. Yo, this is going to be fun next week. So yeah, here's my McDonald's position. I have 14 shares of Mickey D's, and then Uber, Shop. This day is huge. Uber, Shopify, AppLovin, Airbnb, Duolingo, TKO, which is the UFC. Look at TKO. They have a perfect ticker symbol. TKO ticker symbol. And this is the WWE, the UFC, and IMG Worldwide. Okay. Anyway, lots of crazy earnings this week. Eli Lilly, Constellation Energy, Monster Beverage. So yeah, that'll be fun. How do we see upcoming? Yeah, hey, Dino, I'm actually on a brokerage right here. If you want to get this brokerage that I'm on right now, it's in the link tree in my bio, very first link there. It's free. You just click right, if you kind of see right here, Earnings Hub, click on Earnings Hub right here, and it kind of click on Earnings Calendar right here, and you can see it. Yeah. If you want to get this brokerage, it's called Moomoo. It's in the link tree in my bio as well if you want to use my affiliate link. Hey, nice. So yeah. Anyway, let's keep going here. Why suspended? I don't know. That happens a bunch, and they always appeal it. Hey, what up, Finn? What's up, man? What up, Hogan? Hope y'all are having a good Sunday, by the way. Luckily, this is our second stream of the day. We already did a 3-hour stream this morning, so let's keep going here. How about MP Materials? Yeah, so MP Materials, this is your rare earth mineral play, and basically the U.S. and MP Materials just went into a partnership to open up a mine. And this literal one mine will literally supply the U.S. Like certain rare earth minerals for the next 30 years, just one mine, which is crazy. So anyway, great news for MP Materials. What ETFs own this? You go to shareholders here, and then the REMX, the VanEck Rare Earth and Strategic Metals ETF. So that's interesting. Yeah, MP Materials. Anyway. All right. Let's see. NNE Nanonuclear. I think this is a nuclear startup, so I would be careful with this one. So yeah, they're a $1.4 billion company. And well, let's see. Let's go to revenue. So yeah, if you're wondering why the revenue says no data, that's because they don't sell anything. They're a startup. They don't have a product or a service to sell. And they're losing a bit of money right now, 21 mil. But luckily, they have been able to dilute you as a shareholder and issue a bunch of cash. So they've absolutely fortified their balance sheet at the expense of the shareholders. But the stock's still done good nonetheless because they kind of did the right thing there. So let's see. How about Celsius? Hey, they're on my debt-free watch list. So if we go to my watch list right here of companies with zero debt, Celsius is in here. Yeah, here we go. CELH. So if you're wondering, like, why are they so far down off their peak? How they go from 95 to 45? Well, all you got to do is kind of look at the net income right here. And they have recovered, which is great news. But yeah, they used to make like 80, 50 to 70, 80 million of net income a quarter. Then it went negative. So, these year-over-year declines aren't really great for a growth stock. And the revenue, I mean, just the revenue is down 7%, net income's down 42, margins are collapsing, but this company just acquired Alani. If anyone's heard of Alani before, um, oh yeah, look at that. Alani Holdings is also the second largest shareholder. They gave Alani shares, but anyway, they own Alani, the new energy drink that's supposed to bring some growth. So anyway, let's see here. Oh, Amazon as well. Yeah, Amazon. They just reported earnings too. Let's see here. So Amazon, they got hit on their huge capex spend, and the AWS market share lost 2%. So Amazon, here's what's so cool about Amazon, actually, if I show you this real quick. So look, a lot of people know Amazon for their online stores, but that's only 40% of the revenue. Then they have the third-party seller services, and then the AWS business, the Amazon Web Services, which was literally 2025 Q1. This doesn't have 2025 Q2 yet, but it's just incredible growth. I mean, look at this. For the full year 2024, it was 107 billion of revenue. So, I mean, the AWS is huge, but it just lost 2% market share, one to Microsoft, one to Google. But yeah, that's only 16% of the revenue. Then they have the subscription business. Like you go buy Amazon Prime, that's included in this. And they also have Twitch subscriptions. And that's what, yeah, they're an advertising play as well. 7.5% of all the revenue comes from ads and advertising. They own Twitch, Prime Video shows ads, I think. I don't know. And then they have some physical stores. They own grocery stores, or they own a grocery store called 365 Whole Foods. So pretty cool. And actually, Amazon has been really a margin growth story. Like, look at this net margin right here. 10.8% the most recent quarter. If we zoom out, it used to be only a 5, 6, 7% business. So they've really expanded their margin, deleveraged their balance sheet, and they're investing a bunch in the future. So if we go to the cash from investing activities, Amazon literally spent 40 billion just this quarter reinvesting in the company. And Jeff Bezos is the largest shareholder. Look at that. Jeffrey Bezos owns 8.3% of all the shares. So anyway, Amazon's a winner, man. I think that's one you just want to hold forever. And I do. This is, again, my buy and hold portfolio. Once I buy a stock in here, I try not to ever sell it. And Amazon is one that I have chosen, one that I'm never going to sell. I mean, I trust them. How about Piedmont Lithium, about to be a merger on the stock? Yo, hey, Jay, if you give me the ticker symbol, I'll check out that stock. Yeah, if you want to give me a stock, give me the ticker symbol for it, and I'll check it out for you. I got you, man. I bought Amazon shares on Friday. Hey, nice. Any new investments you're eyeing or have on your watch list? So one stock I actually have an order for right now, orders in, is for ticker symbol COKE, co-consolidated. So that is one I do have. I've been dollar cost averaging. I do want to make a quick disclaimer. I'm not an expert. Don't listen to me. And here's why I recommend, if you want to buy a stock, I recommend you should DCA, dollar cost average, into the stock. It's a more of a disciplined, patient approach. Instead of spending all your money at once buying into a stock, slowly buy into it, kind of like this. But this won't save you. Like, look at this. Even though I did that, look at this. This stock is still at an all-time low, and I've lost a boatload of money. So with that being said, always do your own research. Make sure you're buying a high-quality company. PLL. Let's see. Piedmont Lithium. So the reason the stock's been hurt so bad is because the price of lithium has collapsed. So much infrastructure and mining for lithium started to happen with the EV boom, and we're just so much oversupply right now. And so the price of lithium has collapsed, and basically this stock just follows what other lithium does. And let's see. They have a really good balance sheet, though, so pretty much no risk of bankruptcy here. Really good balance sheet. Let's see how much cash they have. So 68 million of cash, no debt. That's pretty good. So yeah, basically that's just a way to get exposure to lithium, but I don't know. I don't love the commodity stocks, but someone said he's going through a merger. So that's really interesting. I wonder what that'll do. BBAI. Yo, Finn, I don't love this company, to be honest with you, but let me analyze them anyway. I remember not liking this one. So yeah, this is a $1.9 billion company. I think they're categorized in like the meme stocks, but $1.9 billion company. And look at this. Lost 150 mil, 70. So they've lost over 200 million the past year. That's well over 10% of the market cap. So they've lost over 10% of the entire market cap in net income the past year. And the revenue growth isn't great. I mean, the revenue is up 4.9%. So to be honest with you, nothing's really blowing me away here. Ooh, they did just beef up their balance sheet right here because they were able to issue some shares and raise a bunch of cash. But besides that, I mean, I don't see too much value in that one. But they need to fix those net income losses. Then that one might actually start to look a little bit more interesting. But yeah, those net income losses do kind of scare me a little bit. So yeah, Duolingo. Hey, yeah, I think they report earnings. Let me go back to the earnings hub right here. I'm pretty sure Duolingo also reports this week. You know, McDonald's, Disney, Palantir. A lot of popular ones report this week. McDonald's and I think Duolingo was another one. Let me pull it up. So was it? Yeah, sorry. Yo, Airbnb reports this week. AppLovin, Shopify. Man, I could have sworn. Um, Yelp reports earnings. That's really interesting. Anyway, let me just type it in. I don't care at this point. Lots of fun earnings next week, so make sure you hit the follow button, hit the subscribe button. We're gonna be streaming for all the earnings and stuff and making videos about it. But anyway, here's Duolingo right here. If anyone's heard of that boring language learning application, this is them right here. This is Duolingo, and they have really surprising, like, good fundamentals. Like, look at this. Their subscription revenue is 83% of the business, and you can't make this up. Look at these year-over-year growth rates. It literally grows 50% every quarter for the past, couple years. Literally, what? I mean, it literally just hits a new record every quarter. I mean, if we kind of zoom out here and look at these, it just grows 50% every quarter, every year. I don't get it. Just incredible growth. Oh, yeah, they're also a small advertising play. Like, look, their advertising revenue also grew 38% year over year. Had a nice little bump up. So they're an advertising play, a subscription model play. I love subscription model companies. It's all reoccurring revenue. And look at the FCF, which is free cash flow. They made $100 million of free cash flow, up 31%. What about net income? Net income up 30%. I mean, 35 million net income. What's the margins on this company? 15% net margin. Nice. So yeah, Duolingo's one I really like. Yo, Mac, what's up, brother? Hope y'all are having a good Sunday, by the way. Um, Dino said TMF stock. Is that the 3x 20-year treasury bond? So yeah, this is TMF. It's a 3x leverage of TLT. So whatever TLT does, this moves that times 3. And this is basically your bet if interest rates are going to go lower. So this is just the US 20-year treasury bond. When interest rates were cut to 0% interest rates in 2020, 2021, this is what that did to TLT. It made this go up. So if one day we do go back to zero interest rate environment, this will be $150 a share. So basically what I'm trying to say is TMF is a bet you want to make if interest rates are about to be cut. And this will just go up a bunch. It's a 3x. So I would still be careful. TLT might be better because you just get the dividend on that one. But yeah. What up, Super said RZLV. What is RZLV stock? Let's check it out. Resolve AI. So if you look at the top right here, it's a pretty small one. A $700 million company. So I would be careful with this. And yeah, if we kind of zoom out here, the stock has not been doing too good. But let's check them out nonetheless here. They're a United Kingdom stock, so all the revenue comes from the UK. Do beware of that. But let's see revenue. So yeah, for the entire year of 2024, this company did 180,000 of revenue. I mean, there might be someone in here making more than this company, and they lost 172 million that same year. So you're buying a company that made 180,000, lost 170 million, has more liabilities than they have assets. So yeah, not really one that's blowing me away to really buy that one from a financials point of view. Moths said AMD stock. Yeah, man, I love AMD. They also report earnings in 2 days. So that'll be really interesting to see what happens with AMD. I do own this one. It's actually our largest holding here in my Webull account. And we didn't even buy the bottom on this one. I mean, look, we bought this one at 124. The bottom was, $80. So we didn't exactly time the bottom, but we're still up a really nice 39% on AMD. So anyway, I might be biased, but let me analyze this company for you. I wouldn't buy this one before earnings. But check this out. The PC GPU market share is a 17%. So a really good market share right here. Obviously, we know that. But my favorite part about AMD is actually the data center business. Every data center needs GPUs, and AMD can get the newest, hottest GPUs from AMD for free at the lowest price and as soon as they're available. So anyway, AMD's data center business has been blowing up, and it's really helping out their free cash. I mean, the free cash flow went up 91% year over year. The net income is also up a ridiculous 500%. And look at this fortress of a balance sheet as well. I mean, This is really good. I mean, no net debt on this company. So AMD is doing all the right things, and they're also capex heavy right now. I love that they're investing in the future. Invested 1.21 billion last quarter, partially from an acquisition. But I love what AMD is doing over there, and I think they're going to just continue to win. But I don't know. The valuation's a little high right now. I don't think I'd buy them before earnings. But I'm still holding on to my shares through earnings. Not going to sell anything. All right. So thoughts on TIT stock? Wait, do you mean TLT or TIT? I don't see that ticker symbol actually. So let's see here. Um did you get into Figma? I did not actually. So Figma had a crazy IPO. Like they IPO'd at $33 and they went up the same day to 120 bucks. So really incredible IPO there. Some of the IPOs lately have just gone nuts. And look at this. This is actually a profitable company. They made 44 million of net income just in the most recent quarter. The revenues, I mean, again, we have no data from this company because they just IPO'd, but look, the revenue's up 46%. Net income's 44 million on that. Pretty good balance sheet as well from the 1 quarter of data that we have. But yeah, Figma, they seem interesting. I want to see more data behind that. See more earnings reports and stuff. Their CEO is a grifter. They're trying to ride the AI. Oh yeah, the Lisa Sue or whatever. Waiting for the Stripe IPO. Yeah, Stripe and like, is it Zelle that might, or I think it's Stripe, yeah. What are your thoughts on the SPY tomorrow? Hey, yeah, the SPY, it's really green right now, like surprisingly green. Check this out. If you go to the watch list, look, the SPY or the S&P 500 is up 0.36% right now. So, yo, congrats if you own any stocks. If things keep up, I mean, we're going to be really green next week. So that's good. Kind of see what else is moving in here. Nvidia's green, Tesla, the QQQ, Apple, Microsoft, and Palantir reports earnings tomorrow. So that'll be a really interesting one to see what happens there. But yeah, these are stocks of my watches. Yo, if you guys, by the way, got any last minute stocks you want to look at, let me know. I am probably going to end the stream here in like 20 minutes, but I will keep looking at a few more here. Yeah, we can look at Google too. What up, Regent? So Google and Meta. We'll look at Google first. So this is another company you probably just want to buy and hold forever. I mean, no reason to sell out of Google. They're just so great. I mean, look at this PE. The PE ratio is the net income multiple. They're literally trading at a 20 PE. The industry average is a 21. So we have a Mag 7 company here trading at below industry average. So that is one thing I do find a bit interesting. So first off, the valuation is pretty fair. I feel like Google could stretch up to a 22, 23, 24 PE before it could like top out, before things get a little too overvalued there. Also, they're growing their margins as well. Like, look, the revenue's up 13% year over year. Net income's up 19. So that means, yeah, they're growing their net margins, 30% net margins. They're so innovative as well. I mean, Google owns YouTube, Android, the Google Cloud business. I mean, look at the Google Cloud revenue. I mean, just this business, the Google Cloud's up 31% year over year. They just acquired Wiz for $30 billion. They own Waymo, if anyone's heard of Waymo before. I mean, great. So yeah, Google, and dude, they have a absolute fortress of a balance sheet. I think Google has $100 billion of net cash. Oh, and actually, I want to show you the best part about Google. So look at this. What is Google doing with 28 billion? So look, Google made 28 billion of net income just in the most recent quarter. Well, guess what they're doing with that? They're literally spending 13 to 15 billion dollars every quarter just on stock buybacks, literally just buying back their own stock. So they're such a shareholder friendly company, buying back literally 10 billion plus of their stock every quarter. And look at this, their dividend, they just started paying a dividend too, only cost 2.5 billion. So they have so much room to raise their dividend. Like they'll one day stop the buybacks and replace it with dividends. I mean, if you buy this stock and hold it, I feel like in 10 years from now, you're going to have like a 4 or 5% dividend yield on cost. And hey, Don C said, hey, what app is this? Hey, yeah, if you go to the link tree in my bio, it's the very first link there. If you want to get this app I'm on, it's actually a brokerage that I'm on. It's my favorite one for analysis. And yeah, if you want to get it, link tree in bio, first link. It's an affiliate link too. So if you deposit $100, we'll both get some free stocks. It's where I like to keep my idle cash too. Like, look, earned you a nice little interest, your idle cash. Lowest fee brokerage. I also have these other ones. Like I have Robinhood and Webull as well. But this is my favorite one to do analysis, lowest fee. Like you don't have to pay $5 a month like with Robinhood, and you get the 4.10% APY daily interest. So anyway, let's keep going here. Let's look at Meta stock and Coca-Cola. Yeah, we can look at Coca-Cola too. But let me look at Meta real quick. This is another one I own. And here's what's crazy about Meta. We get some crazy stats here. Like, look, we can see their daily active users. This is what's kind of crazy to believe. They have 3.43 billion daily active users, which is pretty crazy. Yeah, no problem, Don. And look at this right here. The PE ratio is also a 27. So this is what's crazy. Stock is at all-time highs, but the PE ratio isn't at all-time highs. That's because the E part of the ratio is growing so much. The earnings is growing, so the PE stays flat while the net income grows and the stock price is at all-time highs. So anyway, I think there's room for this one to stretch up to like a 29 PE before it tops out. Like, look at this crazy expansion of margin. Like, the revenue grew 21, net income grew 36. So this is a $2 trillion company with 40% net margins. I mean, Facebook ads, Instagram ads, Threads, WhatsApp, they just print money. And they're just now introducing ads to WhatsApp. The original, when Meta acquired WhatsApp, his original slogan was no games, no gimmicks, no ads ever. And now Meta's putting ads on WhatsApp. Also, has anyone heard of Threads? Threads is nearing the same amount of daily active users as X, formerly Twitter. Let's see here. Do you partake in the Figma IPO? I did not, but I do miss out on them. They went up like 300%. Yo, ANH said Grab Holdings. Yo, this is such a fascinating company right here. So if you're wondering what is Grab, what is Grab Holding, they literally do exactly what Uber does, but in all these other countries. So they do what Uber does, but look, in Malaysia, Indonesia, Singapore, all these other countries. So notice the US and Canada aren't on here. So that's what's genius about Uber being the largest shareholder. Uber bought 13% of this entire company, and it's genius. It gave them instant international diversification. They have a really good balance sheet. They're making a boatload of free cash flow every quarter. They're net income positive every quarter the past 4 years. These year-over-year growth rate numbers are incredible. So I think they're backed by Uber and by Toyota. Look at that. Toyota Motor owns 5.5% of the company, and Didi. Didi has 3%. I didn't know that. Hey. Anyway, they're pretty cool. I do like them as a good long-term hold. We just need another lawsuit so we can buy in. Yeah, dude. I think Google won't have to sell off Google Chrome because AI and LLMs are already coming for their business model. So someone said Talon Energy. So this is a nuclear play. And Talon Energy just bought this nuclear reactor, this one nuclear reactor, for a pretty ridiculous price. Like, they for sure overpaid for it. But guess what that did? It was great for the industry, though. That kind of, there's only so many reactors, I think like less than 100 in the US, that made the value of every other nuclear reactor go up. So there's this other nuclear stock, Constellation Energy, which owns the most amount of nuclear reactors, that same day rallied like crazy. It was right here. Rallied up like crazy. So anyway, we can thank Talon Energy for that. Talon Energy has a deal with Amazon for a nuclear data center. They're cool. Looking to get into a defense stock. What are your thoughts on NI? Let's see. NI Source. Let's check it out. So hey, look at that. The stock is at an all-time high right now. So that's pretty good. A 20 bill market cap, only a 23 PE. So let me see this. So yeah, the PE is a 23. Let me go to the past 3 months. So yeah, the industry average is a 19 though. Columbia Operations, Northern Indiana Public Services. So I don't know if this is an aerospace and defense company. It might be. But let's see the net income right here. So wow, look at that net income. They made $500 million just this quarter. What about the sales? So revenue's up 27, net income's up 31. They grew their margins a bit, which is really good. So hey, they're pretty interesting. 2.5% dividend yield on this company. Not too bad. Oh, they're a utility. Okay. Do you prefer Coca-Cola? Hey, H2A, thanks for the nice words, man. Hope you're having a good Sunday. Thoughts on KO over Coca-Cola? I like Coca-Cola Consolidated more, but I love both companies. Like, if you go to Buffett's portfolio right here, obviously these super investors got to make their portfolios public, but Warren Buffett, 9.8% of his portfolio is in Coca-Cola. And hey, look at this. This app is telling me, what is this right here? There's a bearish flag. Anyway, that's technical analysis. Coca-Cola is such a great dividend growth company. Like, if you buy the stock right now, you're getting a near 3% dividend yield. The dividend's safe. They raise it every year slightly. The PE is a 24. Where's the net income? So yeah, look at this net income. That's really good growth actually for Coca-Cola. Wow, grew 58%. Was that real? So yeah, it wasn't. Okay, it wasn't real. That's what I thought. So still, it did grow 8% year over year. But yeah, I do really like Coca-Cola. But I personally would rather buy this company right here, Coca-Cola Consolidated, the bottling company, more than that one. So, yeah, that's just my thoughts. So here's a company that I think has a real risk of having their dividend get cut. And I'll be quick about this one because they're not too popular, but you've probably heard of them before. United Parcel Service, ticker symbol UPS. Their stock has been struggling. Yeah, we'll look at Oscar Health too. Hey, what up, Ritmos? Thank you so much, man. Yeah, Robert, we can look at Kratos Defense as well. That's your drone play. But here's United Parcel Services. I want to go over why I think that this one might be at risk of a dividend cut. So first off, look at this crazy yield, a 7.75% dividend yield. I mean, you're supposed to get on average like 8% in the S&P 500 every year. Well, you're getting 8% a year just in dividends from this stock. And here's why I think it's not actually sustainable. So I'll just show you the numbers for yourself. Again, I just like showing you the numbers for yourself. Then you can draw your own conclusion. None of this is financial advice. But look, they made $1.28 billion this quarter, $1.2 billion last quarter. But remember this, they made $1.28 billion of net income just this quarter. Let's go see how much the dividend costs. So the dividend cost $1.35 billion. So they literally couldn't afford the dividend this or last quarter. So literally all their net income is getting eaten up by the dividends. So they have no leftover money. That means if they want to do M&A or reinvest in the company, they have to issue debt or issue shares and dilute you. So it's tough, and I can see why this one isn't doing too well. I think a dividend cut might actually be healthy. Dang, cash flow fell 82%. So yeah, I'd be careful with UPS. I can kind of understand why that one's not doing too well. The dividend payout ratio is just a little too high to be comfortable and trust that one too much. But let's see, OSCR stock. Yeah, this is your healthcare, Medicare, Medicaid stock, and they've kind of just been caught up in all the shenanigans from United Health and CNC. That's why they kind of gapped down on this day. That same day, CNC fell. So there's one thing that's kind of like a saving grace here. Why I love this stock. They are so growthy. Just in the most recent quarter, they did $3 billion of revenue, up 42% from the previous year. So they did $3 billion of revenue just in the past 3 months. So they're doing $1 billion of revenue a month. And if you go to it on an annual basis, I mean, for the full year 2024, the revenue was nothing. It was 590 mil. Now it's 9.2 billion, and it's just going to continue to grow. So anyway, they're really taking market share. They're also growing the net income. Probably by this time next year, they'll be making net income every quarter. They made 55% more net income than the same time last year. So again, regulation aside, I love their financials. They're great. So yeah, let's look at KTOS. So this is a drone play, Kratos Defense and Security, I believe. And look at that. Wow. The stock is at an all-time high right now. So yeah, congrats if you own this one. You got to be up on your position. Man, where's my water? Sorry. So yeah, look at this. Here's their unmanned systems. This is their drone revenue. It's only 21% of the business, but then they have the Kratos government solutions. But here's the good news is they're making net income every quarter. I mean, not much, but still, it's better than losing money. They're making a few million every quarter. Revenue's up 9%, but yeah, profitable company, pretty good balance sheet as well. So yeah, any thoughts on buying in the tanking healthcare giants like Elephants? Yeah, hey, you know what? Let's go look at UNH as well because we haven't looked at UNH in a bit. So United Healthcare, yeah. So basically, the big thing about this is this company gets accused of fraud, which the market's kind of pressing in a high chance of that. If this company gets accused of fraud, they will get kicked out of Medicare and Medicaid for 5 years, and that's a significant portion of the revenue. But look at this right here. Here's why I think this one might be worth a nibble. I think the risk to reward might be pretty good on this one because they just keep on going lower. Like they gap down, and now they just keep on going lower right here. It's this PE ratio right here. The PE is a 9.9. I mean, they're pretty much pricing in for the net income to fall another 30-40%. And if that happens, they're still pretty relatively fairly valued. But again, they get accused of fraud, not good. We're actually a customer. We use the OptumRx business. And I mean, this might be why the government's not too happy. I mean, how does your revenue go from 35 bill to 91 bill to 133? And that's just the OptumRx. I mean, look at the United Healthcare. It's 300 bill of revenue. Anyway, super growthy company, largest provider. I think they'll end up being fine in the long run. But yeah, the short-term volatility is crazy. Let's see here. Is BITI a good buy right now because Bitcoin's at all-time high? So yeah, if you're wondering what BITI is, it's the inverse Bitcoin ETF. So if Bitcoin goes down 1%, this goes up 1%. So it's just inverse Bitcoin. And as we know, Bitcoin's pretty much at all-time highs. So this is at all-time lows. So anyway, if we kind of see, this is like a short-term trading vehicle if you're bearish on Bitcoin. So yeah, that's pretty interesting one. Yo, stay curious, stay informed. What's up, man? Hope you're having a good Sunday. What's up, brother? Yeah, hey, if y'all want to help me out, make sure to hit the like button on the stream, and we're going to be streaming tomorrow for sure as well. So someone said MSTR, T Willie 05. So this is a company that is another kind of Bitcoin proxy. They just issue a bunch of shares and buy Bitcoin with it. So look at their balance sheet right now. 64 billion of assets, up from just 7 billion a year ago. What happened for them to gain like 70 or 60 billion of assets? It's basically because they've been diluting you as a shareholder. They diluted you by like $20 billion and they literally just bought Bitcoin with it. And then the Bitcoin that they bought is up like 30%. So anyway, they're just a Bitcoin proxy. Usually whenever Bitcoin goes up 1, they go up like 2 or something. So yeah. Yo, thanks for all the follows. I appreciate that. Let's see. When do you normally stream? I stream every day. Not around this time. What are you doing? Hey, we're just looking at stocks right here. Oh, hey, how are you doing? Yeah, what up, Stocks Vision? Hope you're doing good, man. Manish said SG stock, please. What is ticker symbol SG? This is Sweet Green. So let's see how this is doing. So a very small company, a $1.4 billion market cap. So they're not that big of a company, but let's see how they're doing. So revenue is 166 mil, up 5%. But look at this. This is kind of the bad news here. They're losing net income every single quarter. Nearly 100 million of net income a year. So we want to kind of see that trend start to reverse because 100 million a year when you're only worth 1.4 bill, that's 1/14th of the company. So let me see, are they just missing expectations? Like what's happening? I mean, no. I don't know why this company has been so heavily suppressed. I'm not sure. Maybe it's just the net income losses, but I don't know about that one. Thanks. As of 2025 progresses, will you cover trade crypto blended companies? Yo, hey, what up, Ritmos? Hey, that is an interesting sector. I know SoFi and Robinhood are doing some stuff for that. Yo, Raja, what's up, man? Happy Sunday. I bought some on the Amazon. I bought some of the Amazon dip. Yo, corporatism, what's up, dude? Yeah, Amazon. This is my buy and hold portfolio. I think Amazon is one of the best buy and hold forever companies. Like I think I trust Amazon more than Google in the long run. Like Amazon is just so great. I think they're going to be maybe the first $10 trillion company, maybe more than NVIDIA. I don't know. AWS is huge. The reason the stock fell is because their AWS did lose some growth. They lost 1% market share to Google and another 1% market share to Microsoft Azure Cloud, which isn't great, but Amazon's just so profitable now. I mean, literally making 15 to 20 billion of net income every quarter. They keep on growing their net margins as well. That's one story that people are liking on Amazon is the margin growth here. So yeah, look at this. Amazon was a tough buy, negative margin. Then they got to single digit margin, but now, double digit margins on Amazon, really good. So I just love the innovation here. They also own Twitch, third party seller services, Whole Foods. So Amazon's really cool. So, hey, what up, Raja? Thanks so much, man. Stock said, what do you think about UNH? Yo, Vision, if you literally scroll back 5 minutes in the stream, we just looked at United Health, so I don't really want to cover that one again. Someone said Reddit. Yo, a lot of people think this is a meme stock, but I want to show you why I think Reddit is such a great company. So first off, forget that the company is called Reddit. Let's judge them based off their financials. And when we do it that way, this seems like a really great company. I don't know how Reddit pulled this off, but after the revenue grew 53% from the previous year, it just grew another 77%. So the revenue was 500 million this quarter, record quarter. What other company is growing 77% year over year? Not many. So incredible growth of the revenue, and they made 90 million of net income on that. So insane net income. The free cash flow was 110 million, and they have no debt. This is the best part. They have a fortress of a balance sheet. Reddit has no debt whatsoever, $2 billion of cash, earning interest. So anyway, I think the risk to reward looks pretty, well, I don't know about after this huge gap up, but that's why I've been kind of pitching Reddit for a while, and that's why I do own them as well. I got 4 shares of Reddit, but yeah, I've been one of my better performers. Yo, someone said Coinbase stock and Hood. Yeah, we can look at Hood and Coinbase. I got you. We'll check out both of them. So here's Coinbase stock. This is what's weird. Bitcoin's close to all-time highs, but Coinbase fell 16%, and Bitcoin did not fall that. So this was basically just from their earnings. So they missed on revenue. They met on net income, but they missed on their EBITDA. This was the huge miss that investors didn't like. They were expecting 370 million of earnings, and they reported negative 24. They had a little adjustment to their net. Like, look, their net income says positive 1.4. They actually lost money. They had some like little one-time realized gain there, but the revenue only grew 3.3%. I think investors were just a little disappointed. So, all right, Coinbase, I still like them. They're like a Bitcoin proxy though. So let me pull up Hood stock, Robinhood. Man, dude, Robinhood, this is actually my best performing stock of all time. And I'm surprised they're actually not up more. I kind of expect the stock to go up more. But look at this right here on their incredible earnings. We're up 630% on Robinhood. Pretty crazy returns. And I think they deserve to be doing so good. I mean, if we look at this revenue year over year, it's up 45% year over year. Incredible revenue growth. And on this 980 million of revenue, 390 million of that was net income. So they're literally making a couple hundred million of net income every quarter. The margins are incredible. I mean, 40% net margins now. Look at these year-over-year growth numbers. Everything about Robinhood is growing. They're so innovative. They're releasing new products. So I just love Robinhood, man. And I regret every share I've ever sold. So if we go back over here, like I sold 50 shares here. Like I regret every share of Robinhood I've ever sold. So anyway, I bought my Robinhood, like here's where it's at now. I bought my Robinhood shares right after the IPO. Should show me. Yeah, right here is where I bought my Robinhood shares a long, long, long time ago. So let's keep going here. Adobe too. Yeah, hey. Joby. Hey, so actually let me look at Joby first. I actually don't love Joby Aviation, to be honest with you. Or let me see the largest shareholder. So yeah, actually, it is backed by Toyota Motor. So that's kind of the good news. Toyota Motor owns 15% of all the shares. So that's kind of the good news. But here's why I would just probably stay away from this one for now. They don't have any revenue. It's a revenue-less company, or at least the revenue was 55,000 in the most recent quarter. And they're losing, if you average it out here, like well over 100 million of net income every quarter. So I just be very careful with Joby Aviation. They have a pretty good balance sheet, but again, the no revenue, the net income losses make me scared of that one a bit. But whenever they do make some revenue, that'd be great news. I wonder what their contracts are with Toyota and stuff. But here's Adobe, man. Adobe, the thesis is really being hurt here. And I'm on an Adobe product nearly every day. I mean, I use Photoshop, After Effects like daily. And the thing is, who knows what will happen from 10 years from now? In 10 years, we might not need Adobe. That's the scary part that's kind of leading to this PE collapse. It's kind of what's hurting Google right now. We might not need Google search. But anyway, I know someone that just made an incredible logo, like the most incredible logo ever in ChatGPT. And that would have taken me a long time to do in Photoshop. But anyway, look at this PE. It's a 22. I mean, the lowest PE it's like ever traded at versus the industry average of 39. So Adobe's trading at this dog cheap of a valuation right now. And I think for now, it's oversold. And I think it's worth looking into because look at this. If you look at the net income for now, it's great. I mean, 1.6, 1.8 billion of net income every quarter. Free cash flow is even better. It's over 2 billion of free cash flow every single quarter. So what is Adobe doing with 2 billion of free cash flow a quarter since they don't pay a dividend? Well, this is another company doing crazy stock buybacks. They spent $3.5 billion just this quarter buying back their own stock, another 3 billion. So they've bought back nearly 6% of all the shares in the past year. Actually, here's how you can tell. Here's how you can tell if a company's bought back stock just from this. You compare the net income versus the EPS. So look at this. The net income grew by 7.5%, but the earnings per share, the net income per share grew by it's up 12.9% year over year because they bought back so much of their own stock. Yo, no way, Shauna. Thanks so much for the 5 donuts. I really appreciate that. No way, 5 donuts. Thank you. I really appreciate that. Thanks. So yeah, Adobe, I think the risk reward actually does look pretty good on that one. So yeah. Look at Lucid, fam. Yo, Victor, what's up, brother? And what up, Liam? So let's check out Lucid. They sold off their Uber gain, which sucks. And what I mean by that is if we look at Lucid right here, it gapped up on this day. Uber ended up buying $1.2 billion worth of cars from Lucid. And they're like this autonomy driving cars. And the autonomous software is actually NVIDIA software. So Lucid made these cars, and Uber already committed to buying 1.2 billion of them, but the stock is still at all-time lows. And here's why I still wouldn't buy this one. Oh yeah, we'll look at NVO too. But look at this. This whole companies were 7.4 billion. So the whole companies were 7.4 billion, and they're losing a couple hundred million every quarter of net income. This is really bad, and there might even be a slight chance of bankruptcy risk here. And they've also been diluting the life out of you. Like they literally lost 1 billion just this quarter. I mean, that's 1/8 of the entire company. So we want to see that trend really start to get better, but that deal with Uber is really good for them. What is this one? UVIX, and then we'll look at NVO. UVIX stock. So 2x long VIX future. So this is the volatility ETF. So dang, they're up 16%, but after being at all-time low. So yeah, this is a trading vehicle, a 2x leverage of VIX, which is just the volatility on the market. So that's interesting. I didn't know that even I didn't even know that stock existed. So let's check out NVO right here. This is Novo Nordisk. This is the company that owns Ozempic. So if you've heard of that weight loss prescription before, this is the company that owns it. And they just reported earnings, and the earnings were good, but it was the guidance that sent the stock down. So check this out. I actually do think the risk to reward is pretty decent for a nibble on this company. I mean, the PE is a 13. I mean, that's the lowest PE it's ever been at. I mean, we compare that to the industry average of a 23. I mean, this company's at a pretty dog cheap valuation. And look at this, 95% of the revenue comes from their obesity care products, which is Ozempic. And check this out, they're making a lot of net income. For right now, the fundamentals are great. I mean, they're making $4 billion of net income a quarter, easily afford the dividend. You know, they got a 3.33% dividend. But the bad news is their Ozempic patent expires in 2027, which isn't great. I think I read that in like the Morningstar research up here. This is kind of cool. You can read like what the bulls say and the bears say. Anyway, let's see here. They own Wegovy, something like that. Anyway, yeah, they got the Ozempic, Wegovy, all that stuff. Anyway, yo, what up, Joshua? Hope you're having a good Sunday, man. Yeah. Let's see. Joby and air taxes are waiting on government. Oh, Ritmos, that makes sense, man. That might be why they're still revenueless. So, oh, this one's on my watch list actually. RGLD. So, Royal Gold. I know I like some of these gold stocks because you get exposure to gold and you get a yield. So, you know, it's better than just owning some physical gold. You know, you actually get a yield on it. That's kind of the one thing I don't like about some like precious metal commodities. There's no yield on it. But here's Royal Gold right here. Let's see the dividends. So yeah, look at this. You get a over 1% dividend yield with this company. So 1% plus dividend yield here. And look at this. Here's their stream interest and royalty interest. So this company is getting high margin royalties. Let's see how that's doing. Look at these year-over-year growth rates. I mean, this is incredible. Probably just because the price of gold has been so high, but their royalty streams have been incredible. Let's see stream interest right here. That's also up 19% year over year. So both main segments of revenue are very strong on this one. And here's where the revenue comes from. 34% Canada, then a little from the US and a lot of these other countries as well. So internationally diverse, which is good. And yeah, look at this net income up 140%. Man, yeah, I might actually look into buying this one. And look at this fortress of a balance sheet. I mean, they have no debt at all. I mean, $240 million of cash. So actually, Royal Gold is a very interesting company. If you're looking for a royalty stock, I mean, this one making a lot of royalties, 70 million, and that's, you know, all pretty much 99% margin, right? So yeah, let's see. Just sub, yo, Victor, thanks so much for subscribing, man. Yeah, if y'all want to support me, make sure to head over to the YouTube stream. I'm streaming on there right now. Hey, go over from the TikTok to the YouTube stream. By the way, I sell nothing. I don't have a course, book, Discord, WhatsApp, Telegram. I'm just on here giving my opinion. If y'all want to support me, make sure to hit the like button. Astera Labs. Hey, this is another great company with a fortress of a balance sheet as well. I think this one deserves to be doing this well, and I think they're going to continue to do well as well. So check this out. If we go to this revenue growth right here, this is the kind of company I want to own. So growthy. I mean, the revenue went from 65 mil to 160, up 144%. After already being up 270%. So anyway, incredible growth on the revenue. And look at this balance sheet. No debt at all. Tons of assets, tons of cash. The assets keep growing every quarter. And they made net income on this. They made 30 mil this quarter, 25 mil last quarter. So Astera Labs, they're checking all the boxes for me. The cash flow growth is immense. So I can see why this one's done so good. Do you do crypto? Yo, Alpha, I don't own actually any crypto. Yeah, good hedge and has upside. Yeah, gold is a nice little hedge. If there's like currency fears, inflation, war fears, and all these environments, gold does good. So that RGLD stock is really interesting. I play with, yeah, AXRP. Yo, Scion, thanks so much for subscribing, man. Hope you're having a great Sunday. Yeah, German, a little bit of a later stream. We already did a stream earlier today for 3 hours. I wanted to do another one. But yeah, what up, German? Let's see. Let's keep going here. Someone said, Santo said, can you check out MELI stocks? So, yeah, what's this one? Yeah, if you guys got any stocks you want me to look at, let me know in the chat. We can check them out for you. So, MELI stocks. So, this is Mercado Libre, I think it's how it's pronounced. I don't really know exactly or something. Anyway, I think this is like Amazon, but in other countries. This is like the UK Amazon, or what country is it? I don't know. Let me see right here. So, uh-oh. Oh, there goes the TikTok stream. Uh-oh. You know what? I'll just see. Thank you all for being on the YouTube stream. TikTok just took down that stream. Oh, well, doesn't matter. We're over the 2 hour and 15-minute mark anyway. So yeah, look at this. This is the Brazilian Amazon. So look at this. 55% of the revenue just comes from Brazil and Mexico, Argentina. So yeah, look, commerce revenue, basically Amazon. And then they're a fintech business. They have their financial services revenue. Go to that one. Yeah, look at this on an annual basis. So let me just go down here and see. So yeah, revenue's up 36% year over year. Really good growth. And the net income's up 43%. So they're also growing their margins a little bit as well. Great news. Yeah, that's near the same amount of margin as Amazon. So yeah, I can see why this stock is doing so good. They're an e-commerce and fintech stock. So yeah, the Amazon of Brazil. Hey, yeah, you beat me to it, Joshua. Yeah. Jay said OSXQ. What the? Let's check it out. So wait, I can't find that ticker symbol. Let me know if that's the right one. OSXQ. Yeah, if you got another stock you want me to look at, let me know. I can't find that one. Oh, managed at MRVL. Yeah, hey, Marvel and Marvel chips. This is like your chip play. It's really good, actually. They're finally net income positive, which is great news. Well, now my Wi-Fi's, oh, dang, my phone is on 6%. I started the stream, it was on like 50. All right, so here's Marvel Technologies right here. They pay a dividend, so it's really great that they just started making a lot of net income. Like, check this out right here. If we go to the net income, they made, yeah, look at this in the two most recent quarters, basically 200 mil the past 2 quarters. So really great net income numbers because this was a tough buy before today. They paid a dividend, but yet they were losing a couple $100 million every quarter. So great news that they're finally starting to make some money. Really good balance sheet as well. So yeah. Let's see. Design, development, and sale of integrated circuits is where the revenue comes from. Interesting. CyberArk software. Hey, what's the ticker symbol for CyberArk? Royal is the gold standard bear in the royalty gold space. Yeah, hey, what do you think of Powell and Fix? I'm trying to find a good entry. I want to own them. Yeah, those are 2 of my best performers, man. I'm going to be bullish on both of those. But yeah, FIX, it's tough to buy this one at this valuation because they are at all-time highs right now. But yeah, FIX is a great one. And Powell Industries as well. Yo, what's crazy is I'm up 188%. The PE ratio is a 16. I did the math on this last night because I was bored. My PE ratio on cost is a 5.5 on this company, which is crazy. Yeah, I bought all my shares a long time ago on Powell. I just bought it all in one day and just haven't really done anything since with it. But yeah, Powell Industries, nice dividend growth potential. I mean, a 0.5% yield, only an 8% payout ratio. They actually have a higher dividend yield and half the payout ratio of Apple. So higher payout ratio, higher dividend yield, lower payout ratio than Apple. FIX as well, yo, I'm so glad I own this stock right here. So the PE is a 35. That's kind of in line what it always is. Even though the stock's at an all-time high, like check this out, stock's at an all-time high, the PE ratio is in line with historical averages. That's because the E in PE has gone up so much. The earnings have risen so much. And this is the kind of company I want to own. Look at these net income growth numbers. Just look at the green number, these year-over-year growth rates. They've just had 3 years straight of just immense year-over-year net income growth. So look, net income is up 72, but the net income per share is up 74.6. That's thanks to the buybacks. So you get more net income per share thanks to the buybacks. Anyway, FIX is such a cool company. They're your main HVAC company, heating, ventilation, air conditioning. And a lot of their growth recently has literally been from Bitcoin mining rigs and data centers. The tech revenue growth is now 40% of the revenue. It saw like 60% year over year growth. And they said it was from Bitcoin mining rigs and data centers where they install like the ventilation like right into the server racks rather than water cooling it. It's actually more effective than water cooling. Anyway, FIX is a really cool stock. I made a YouTube video about them recently. Want to check it out? I feel like AMD is going to crush earnings this week. Yeah, dude. So AMD, I do own them as well. They're, I think, my largest holding in here. So yeah, we're up 40% on them. I want to analyze them too. And we didn't even time the bottom on this one, and we still have a really good position in them. I also need to get my portable charger. My phone might die on me, and I want to keep streaming here. So AMD stock, I'll be quick about this one because we all know about this one. I'll catch up on YouTube also. Hey, thanks, Ritmos. Thank you so much, man. Hope y'all are having a good Sunday, by the way. Can't wait to see what happens next week. Yo, actually, real quick, if you go to the S&P 500 right now, look at this. It keeps going up. SPY is up 0.4%. So get ready for potentially a green day on Monday. Can't wait to see what happens. Yeah, Meta's up 1%. Google's up 0.3%. Not too bad. But anyway, let's get back to AMD right here. Obviously, we know AMD sells GPUs. They have this crazy 17% PC GPU market share. But my favorite part is actually the data center business, which is half the revenue now. So data center business is half the revenue. And that's because these data centers, if you're not AMD, you're ordering AMD chips or NVIDIA chips. Well, AMD, they can get them chips themselves because they make it the quickest and at the lowest cost. So the data center business for them is genius to get into, and it's done great news for their free cash flow. I mean, free cash flow's up 91%, net income's up 400%, absolute monster balance sheet, no net debt. So anyway, AMD, I am curious for what will happen on earnings. We got a lot of good earnings. Hey, Plasma, what's up, man? Good to see you. Your live just ended? Yeah, dude. Yeah, Shauna, my live on TikTok did end. TikTok took it down. I didn't do that. Here, maybe I could pull it up and show you. Look at this. Live access suspended. Thank you, TikTok. Anyway, thank you, TikTok. Okay, sorry. We'll handle that later. So and Palantir earnings. Oh yeah, so Palantir reports earnings on Monday. That'll be very interesting to watch. You think Palantir still has more room to run with earnings? I don't think it has too much more room to grow. I mean, maybe you could juice another 10%, but I mean, the valuation on Palantir is pretty redonkulous. I mean, we go to the price to sales ratio, so not the PE, the price to net income, but the price to sales is 116. So this company would literally need to double their revenue by like 2030 for this to be somewhat reasonable. But anyway, if we judge it like any other company, but here's why people love this stock. I mean, half the revenue comes from the government, and so many police stations are using Palantir in their software. It's up 45% year over year. So the government revenue has seen some really nice growth, and the commercial revenue, like Google and your mom and pop ice cream shop, they use Palantir, and that's up 33% year over year. And look at this balance sheet. I mean, another great balance sheet company, no net debt, making net income every quarter, super growthy. So I just think the valuation is too high, but they do report earnings on Monday, and I'm curious to see what happens. So Scott said ARCC is the king of dividends. I actually agree with you because this is one of the few companies that actually have to, by law, pay out most of their taxable income in the form of a dividend. And that's why this 8.5% dividend yield, why it is abnormally high, it's actually sustainable because this is a BDC. And also these dividends are unqualified. So when you get these dividends, they're not like any other stock, like McDonald's. You're actually taxed higher on it. It's taxed as short-term capital gains instead of long-term capital gains like your average stock like McDonald's. So that's one thing you do got to be aware. But yeah, but still that 8% dividend is sustainable because they're a BDC, business development company. Yeah, hey, let's check out ENS stock. What is ENS? I don't know if I've heard of this one before. ENS stock. So Intersys. So let's check it out. So this is a $3.44 billion company. They must sell a commodity because that PE is pretty cheap. So a 9.92 PE, that's like the lowest PE they've ever traded at. The industry average is a 35. So they're trading at lower than industry average. We can see Energy Systems. How's this doing? So this might be why they're not too growthy. And actually for the fiscal year, I mean, the revenue's actually declined a bit. Year over year, it is up 8%. Let's see. What about Motive Power? Flat year over year. Specialty, how's that doing? Oops. Specialty revenue. Hey, look, the specialty revenue is up 21%, so that's good. But I think investors just don't like the slowing growth here. Ooh, they're really profitable. So let's see. Revenue's up 7, net income's up 58. So they've actually really grown their margins here. Yeah, look at this margin growth, up 50% from the previous year. It went from 6.7 to 9.9. That's incredible. So that really helped out their net income. They're making close to 100 mil a quarter. So do they pay a dividend as well? Yeah, you get whoa, look at that, a 1% yield and only a 10% payout ratio. So if you kind of maximize their payout ratio, if they went 100% payout ratio, you get a 10% dividend. So yeah, that actually is perfect math with the 10 PE. Yeah, there should be trading, a 9.9 PE. So that kind of all perfectly adds up there. That's interesting. Yeah, hey, let's see. And what is AZZ as well? We'll check this one out too. So AZZ Inc. So a $3.2 billion company, also at a fair valuation, a 12 PE. So let's go see what this company does. I like this market cap. $3.2 billion market cap. There's a lot of room for them to grow that. So let's see. Pre-coat metals and metal coating. That sounds really niche. Let's see. So this business is flat. I mean, not crazy growth, but still not too bad. The metal coatings revenue is up 5% year over year. Let's see the net income though. So you see how the net income went up a bunch, 170 mil. We could tell that that's a one-time adjustment because we go to the operating profit. It actually fell by 0.29%, but I don't know here. Did they sell an asset or something? I wonder how they got this huge inflow of cash. I do wonder what kind of happened there to the net income. But anyway, yeah, they're making 30, 40 million a quarter. They pay a dividend, a 0.64% dividend yield. It's a bit of a higher payout ratio for the yield, but they're interesting, a 13 PE. Yo, what up, Greg Lambert? Hope you're having a good day, man. What's up? Yeah, let me go back over here to the Robinhood portfolio. By the way, this is my dividend growth portfolio. So every stock in this account pays a dividend. And I also wanted to quickly go over another higher yielding kind of stock. This is my Roth IRA, by the way. It's only $1,500. I'm trying to deposit more into here, and I got some pretty trash holdings in here. But one company I do really like that has a high dividend, if you're looking for these, is Main Street Capital. This is one of the few stocks that actually pay a monthly dividend. There aren't many stocks that do that. But this is another stock that pays you monthly dividends, ticker symbol MAIN. And they're actually making so much money that sometimes they pay you twice in 1 month. Look at this. They paid you 0.255. And then right here, just as in between these 2 months, they paid you an extra 30 cents because they're making so much money. So I'll kind of keep this simple here and not too complicated, but they pay you 25 cents a month, which is 75 cents a quarter, or 79 cents a quarter. And they're making well over $1 a quarter of earnings per share, net income per share. So that's how they can easily afford to do these special dividends. Where look, 25 and then the 30-cent special dividends. So anyway, yeah, Main Street Capital is a cool one, and they've had some really good stock price appreciation. I mean, look at that. The stock's pretty close to all-time highs. So you're on Moomoo, right? Yeah. Hey, actually, I got multiple portfolios here, but yeah, the main app that I'm using here is Moomoo right here. Yes, sir. I see CSL in your portfolio. Is there any particular reason you bought that? Yeah, I love this industry right here. So there's a lot of pent-up demand in the re-roofing cycle. This is also such a shareholder-friendly company. This is the one they're so shareholder-friendly. That's what I love about them. Carlisle, this company right here, has been raising their dividends for over 49 years. So next year they're going to be a dividend king. But there's one thing I really want to show you that I love about this stock. So look at this right here. The total common shares outstanding. Look in the very bottom left. This is 2025 Q2, the most recent quarter. There's 42.6 million shares. You own 8.2% more of the company than you did a year ago. They are such a shareholder-friendly company. So look, there's 42.6 million shares. Let's go to 42. In 2020, there was 54. I mean, they've bought back 20 to 30% of every share. I mean, just crazy. So anyway, shareholder-friendly company. And look, because of that, even though the net income's been falling a bit, the EPS is doing amazing. So check this out right here. Where did it go? Hold on. Where's the EPS right here? So yeah, look at this. The EPS was 596. It's actually just at a record EPS, tied record EPS quarter with the same time last year. So anyway, yeah, they make $6 just this quarter. So they made $6 just this quarter. The dividend only cost $1. So they could pay off the entire year of dividends just in the most recent quarter. Anyway, I've made a lot of YouTube videos on why I love that stock as well. And they used to be my largest holding, but then it got taken over by Constellation Energy just because Carlisle is down like 18% the past week. Yeah, look at that. They're down 18.5%. When Constellation Energy has been a great performer. This is your largest nuclear energy play. Constellation Energy right here literally owns 50% of all the US nuclear energy reactors. Tempest AI just overpaid the life out of this one reactor, sending the value of all other nuclear reactors up. So great news for the industry. They took one for the team. But anyway, let's see. And they also are acquiring Calpine. It's instantly accretive, $2 a year to EPS and $2 billion of free cash flow a year accretive. Finn said ETHA. Why? How come you use all three? So yeah, there's no burden of having multiple portfolios. I kind of liked it just for simplicity because I'm a content creator, but having three brokerages, there's no burden. It's just an extra little 1099 form at the end of the year, already filled out sheet of paper. You just hand over, easiest tax form there is. So, I already get one from Google and PayPal and all these other places. So it's no burden of having multiple portfolios. And I kind of like having different goals with each portfolio. Like this one right here, it's called my buy and hold portfolio. Once I buy a stock in this account, I try to never sell it. I just hold it kind of forever for the long run. This is my dividend growth portfolio, all S&P 500 companies. So every stock in here is in the S&P 500. Every stock in here also pays a dividend. You've probably heard of a lot of these before, like a Google, a Meta, a McDonald's, United Rentals. And here's my total percent change. Yeah, we are up on every stock, luckily. Let's see how we're doing. Year to date, we're up 9.3. Past year, we're up 18. How's that compared to the SPY, actually? Past year on the SPY is up 16, and year to date's up 8 or 6. So we've done like 3 or 4% better than the market. Nothing to really brag about, but it's really this portfolio that's been crushing it. I mean, year to date, we're up 39% versus the S&P up 6.3. Again, mainly that's led from FIX right here, Comfort Systems, and also Amphenol Group. Amphenol Group, this is that copper company that's supplying NVIDIA with their copper cables. So NVIDIA has this new NVIDIA NVLink spine product that uses 2 miles of copper cable just in this one little product, and they're getting that from Amphenol Group. Also, news today, Amphenol is acquiring a company for $10 billion. So that'll be interesting. All right, so let's keep going here. Tempest AI, what up, Greg? Yeah, that's a Nancy Pelosi play. I think Nancy Pelosi's been buying that stock. But anyway, let's pull up Tempest AI right here. Also, let me see on the small chance. All right, so yeah, Tempest AI right here, this company has some really good growth behind them. So if we look at right here, the genomics revenue, this is where 75% of the revenue come from. Look at the growth here. I mean, this is the part that's super impressive. I mean, it's up 89% from the previous year. I mean, that's the kind of stuff that would make me want to own the company. So anyway, really impressive growth right there on the genomics and the data and services business. So if we click this as well, it's up 43% year over year. So both main segments of revenue are growing very nicely. I still would be a little careful. They are still losing a bit of net income right now, but it's okay as long as they can keep up this incredible growth. I mean, 75% year over year growth. And look what they've done to their balance sheet. I mean, this is incredible. Look, they used to have a lot more. Look at that, way more liabilities than assets. But look at it now. More liabilities than assets. Best position they've been in a long time. Revenue's growing like crazy. So I like it. I've been looking into CEG. I don't love the current price of it. I agree, Plasma. CEG is a bit highly valued right now, but I did a 2-year out multiple. They're trading at 27 times 2 years out. So it's not crazy, but yeah, I wouldn't buy it here either. I definitely wouldn't buy in CEG over 300, but I love them. Anyway, here's Dutch Bros right here. If anyone heard of Dutch Bros before, they're kind of like a Starbucks competitor. And I remember they're actually doing pretty good right now. I think it's just falling kind of because Chipotle's struggling, Starbucks is struggling. So the whole industry is kind of just struggling right now. But look at this. Their company operated shops is 91% of the revenue. It's up 31% year over year. For a restaurant in this environment, that's actually pretty good growth, up 31% year over year. Let's see right here. So net income, and yeah, look at that. They're making net income every single quarter as well. So this is a profitable company. So hey, I like Dutch Bros actually. Actually, if we pull up Starbucks right here, let me see how Starbucks is doing. Starbucks actually scares me right now. I don't think I actually wouldn't buy Starbucks right now, in my opinion, and here's why. I'd actually rather buy Dutch Bros than Starbucks. So look at this right here. If we go to the net income has collapsed. And this isn't like some one-time adjustment. This is really real, this number right here. So look at this. In the most recent quarter, Starbucks made 560 million of net income. So kind of just remember that number. Starbucks made 560 million of net income, and the dividend cost 693 million. So the dividend cost 700 million a quarter. They literally couldn't afford that. So for the past 3 quarters, basically all of their net income has been eaten up just from the dividend cost. So I think this one might actually have a dividend cut risk. I mean, it's yikes. I knew they did just get the new CEO. Oh yeah, Fed, I forgot to look at this one. That's my bad. ETHA. So I didn't know this ETF already existed. The iShares Ethereum Trust. Oh, the volume has really taken off recently. BlackRock I want to look at BlackRock stocks. So yeah, basically you just buy this ETF if you want to get exposure to Ethereum. I'll actually add this to my watch list real quick. But I actually want to look at BlackRock stocks. So this is the company, if you own that ETHA stock, you pay like a 1 or a 0.5% expense ratio. And that goes back to BlackRock, the asset manager. This is their stock right here. This is one I've actually been looking into to maybe buy the dip on. And check this out. So if we go, they manage assets, and their alternative assets, which is Bitcoin and their Ethereum ETFs, is now 13% of the revenue. It really seen up this bump in the past 6 months right here. Look, it grew 81% year over year. So the alternatives revenue is growing like crazy, and that's their Bitcoin and Ethereum ETF management fees, which is pretty cool. They also have a nice little dividend, 1.9% dividend yield, safe payout ratio. They're making like 1.6, 1.7 billion of net income a quarter. So yeah, BlackRock's pretty cool. Hey, last up, we'll look at Toast right here. So this is like your restaurant point of sale system company, and they report earnings this week as well, I believe. So this will be an interesting one to watch. I might be biased again because I do own this one, but let me show you what I love about Toast right here. And we'll analyze them over here just because why not? But if we head to the revenue's just seen some very solid growth. I mean, look, up 25% year over year. It kind of just hits a new record every quarter. So very growthy on the revenue, and they're finally net income positive. I mean, look at them the past year. They've made like close to 200 mil of net income when, they used to lose millions every quarter. So finally net income positive, insanely good deleveraging balance sheet. I mean, look at this. The liabilities used to be 41% of the assets. Now it's only 34% while growing their assets by 500 million. So, I mean, really good company there. I hopefully they do good on earnings right there. Top stocks on the watch list right now. I don't really have much. EXEL looks very interesting to me. Yeah, EXEL. Let me go to the Moomoo watch list because every company I've ever meaningfully wanted, I've kind of put money into it. But NOC is a really cool stock as well. Northrop Grumman is another stock I'm looking into to buy. But yeah. Anyway, I think I'm gonna wrap up the stream here. I've been streaming for 2 hours and 40 minutes. I hope you guys had a great Sunday. If you want to help me out before you go, just hit the like button on the stream. It really helped me out. And if you want to get this app that I'm on right here, this is my favorite brokerage, by the way. If you want to download this brokerage, I have an affiliate link in the link tree in my bio there, very first link. If you deposit $100, we'll both get some free stocks. It's my favorite app for analysis. It's free, lowest fee. If you keep your cash in here, I keep my idle cash in here because it earns you daily interest. So my $700 made me 23 cents of interest today. So yeah, that's what's pretty cool. So anyway, my favorite stock app for analysis. But yeah, I hope you guys have a great rest of your Sunday. Yeah, see you, Plasma. ? See you later, man. Have a great Sunday. And I'll be live streaming tomorrow. So hey, if you want to hit the notification bell, we'll be live tomorrow. Probably not this late. We'll be streaming earlier in the day, maybe around 12 o'clock. But yeah, you like Moomoo over Robinhood? I do, because except the fact that you can't have a Roth IRA in here, but yeah, Moomoo has a lot more useful, way more, I can't do any of the analysis I was doing on Robinhood. You don't really do analysis on the financials and stuff in Robinhood, but Robinhood is such a simple app. I do love them, and I do have my Roth IRA with them. I love their match program, but in terms of usefulness, I would have to pick Moomoo here. And with Robinhood, you have to pay $5. Robinhood has this gold subscription. You have to pay $5 a month, and you get a 4% APY. So you pay $5 a month, you get 4% of your money back on your cash. Well, with this app, there is no $5 a month. It's free. You get a 4.10% APY. Also, I might be biased. I do own the stock that, so this app right here, Moomoo, is also publicly traded under ticker symbol FUTU. So they're making a boatload of money. And also, I want to show you, they're making a boatload of net income as well. $275 million just this quarter. What about free? Yeah, hey, look, brokerage commissions are most of the revenue. Interest income, they're making a bunch. Anyway, yeah, the 3% Roth IRA match is OP. So yeah, if you want to get this app that I'm on right here, they have 26 million users. Check it out. It's a link in the description and in the link tree in my bio, very first link. It's an affiliate link. So anyway, see you guys later. Have a great rest of your Sunday. See you, Joshua. See you, man.